Please take your seats. The program is about to begin. Please welcome to the stage Meg Szabo, Senior Editor for Bloomberg Green and Sustainability Events.
Good morning, everyone. Hi, so great to see so many faces in here. We are thrilled to be back in New York for our Bloomberg Green Summit. The climate fight is at an inflection point. Here in the US, we're seeing unprecedented legislation, interest, and investment in the environment. Globally, the devastating impacts of climate change are being felt more than ever, and oftentimes in vulnerable communities. Today, we'll focus on some of the people and the solutions that are driving change for this urgent challenge. I'm so excited to share with you our curated speakers for the day. From the person that is responsible for implementing the IRA, to an Earthshot Prize finalist, to the team behind the Apple TV Plus show Extrapolations, we'll highlight the change makers that are working across industries to pave the way for a greener future. But before we get started, I just have a couple of announcements. First, I would love to acknowledge our presenting sponsors, MasterCard and Zurich, and our participating sponsor, Schneider Electric. We would love to hear from you throughout the day. The Wi-Fi login can be found on the back of your badge, and you can also submit questions to us scanning this QR code behind me. We'll flash it a couple of times throughout the day, but you might want to just take a picture so you have it, or take down the URL, which is a little bit long, so you might want to do the QR code. And for those of you that are joining us virtually, please just click on that white tab on the right-hand side of your video window to submit a question. You can also engage with us all day using the hashtag #BloombergGreen. And with that, let's get started. Please join me in welcoming the co-executive chairs of Galvanize Climate Solutions, Katie Hall and Tom Steyer, in conversation with Bloomberg's Caroline Hyde.
Joy to be here with you in real life. What a joy to be with friends, basically, because you two, your history goes back to college, to friendship, to being in business together previously with asset management first in mind, but now it's mission driven. And Katie, tell us a little bit about why now? Why decide to launch this so focused on what is an existential crisis in many people's eyes?
Well, and I think that's exactly the point. It is an existential crisis. And it's a point in time in sort of our history collectively where it's time to take action. And so when Tom and I were thinking about what to do in our next phase of our life, we really felt we were compelled to bring our histories, our past actions together and start a new kind of investment firm, Galvanize Climate Solutions.
I mean, just to go through history, I mean, extraordinary wealth that you've built for others with assets under management. I mean, most successful woman to have ever really founded her own asset management shop. You're thinking about family offices, you're thinking about high net worth individuals in previous lives. But Tom, tell us a little bit about the overarching vision now. Who are you serving and what really is the amount of money and investment you need to shift?
Well, The idea behind galvanized climate solutions is to bring the power of capitalism to solutions for the climate crisis. Very simply, we're at the execution phase, and that really requires investments across the economy. I mean, the estimates are $4 trillion per year, but I almost think that's the wrong way to think about it, because we expect that every company in every industry is going to have to take climate into account all the time. So if you're a car company, you're going to be a climate company. If you're a clothing company, you're going to be a climate company. And in fact, what we're really going to have is climate being part of decision making in the guts of the economy, you know, in real time,
and
everywhere.
Being forced by regulation, being forced by their own, well, the people that they answer to, whether it be their consumers, their employees. What's driving those companies to make those, being forced to become climate companies?
Well, first of all, we're going to be creating businesses that win in the marketplace. Now, there are going to ultimately be measurement across society about emissions.
Yeah.
And that is going to be something that people are going to have to understand and figure into their supply chains and figure into really all parts of their business. It's going to be measurement driven, but it's going to be about companies winning in the marketplace. That is actually how this change is going to take place. And that's why the power of capitalism is so strong, because capitalism scales across the world.
And what's interesting about your method of capitalism is that you're not just thinking, okay, growth venture, you're not just thinking, oh, equities, you're not just thinking real estate, you're thinking actually all of these things. Why bring together such a whole holistic look at how to allocate money?
We think it needs to be this multi-pronged approach, because this is actually a system-wide, an economy-wide challenge. And we need to be able to attack it from all parts of the economy, all parts of the capital stack of companies. And so we really felt it was important to have the opportunity to be looking at companies and solutions and investment solutions across a whole range of areas.
Before we dig into some of those solutions, we were just talking off stage about this measurement conundrum. Katie, you've spoken with David Rubenstein from Bloomberg before, and you were talking about how you'd looked at crypto for some of your focus, the family offices that you serve, the clients that you have. Is blockchain the answer to measurement? Tom, are you seeing regions or thought leadership in the way that actually we bring transparency to that?
Well, I think that different technologies are going to be critical to measurement, but actually the critical part about measurement is going to get the information. That people, you know, there's obviously a big effort going on at the SEC to require different climate disclosures by companies. But there's also, in the EU, there are going to be rules about border adjustments, and they're going to start charging for emissions. What that means is people are going to have to measure. They're no longer going to be able to say, we don't know the answer to that question, it's too hard to get. You know, last night, Katie and I were talking to Lisa Jackson from Apple. And by 2030, they are going to have an ability to show the carbon footprint of every single product. That's what it's going to take, so that when people understand when they're buying a product, by 2030, they'll be carbon neutral. But you have to know, what is the carbon footprint of this shirt? And as an economy, how are we actually strategically going to manage down emissions unless we know what the emissions are, where they're coming from, and then what the alternatives are in terms of running that supply chain?
And I think the impetus of that measurement is part policy, but it's not exclusively. Customers are demanding change. Customers are demanding that companies make change. Employees of companies are wanting to see that the organizations which they work for are actually taking steps in the right direction. So it's more than just a policy-driven response. It's a system-wide. There is a real change at this point in time that is driving this momentum.
It's stakeholders of all your types.
All types.
And therefore, when you're thinking of driving change with your capital right now, I think of real estate. What opportunities have you seen there to really start to make big impact on how much the building that we currently sit in is offsetting the climate impact that it's had in the past?
Historically, that's been an area that has been slow to make the investments needed to decarbonize. And in fact, there actually is the opportunity, we believe, to make accretive investments that is not concessionary. In fact, everything that we're doing as we're looking at investment strategies, and again, marshaling the power of capital to motivate change, is about generating compelling returns, interesting investment returns, because that is actually the proof point of success and will bring in, we believe, additional capital system-wide.
So therefore, Tom, how do you assess an investment opportunity? Because I think in a way, impact became a misnomer. People started to think, oh, it just meant that you were putting money to work, but you didn't always think of profitability. No, you can have both. How are you ensuring that you get best-in-class returns at the same time as best-in-class rewards from a climate perspective?
Well, first of all, we believe that this crisis is the opportunity, that is a huge wind at the back of investment returns for people who are taking into account climate impact. It is absolutely not concessionary. It's the opposite. It's a huge opportunity. But when we think about a specific investment, we have impact officers in the investment committee to make sure that, in fact, it has positive climate impact of material amounts. Having said that, if it doesn't show good returns, we absolutely won't do it on a financial basis, period. And for very good reason. If you're thinking about a global problem, then you need something that has a big impact. You need something that is not irrelevant. And if it doesn't have really good returns, if there isn't really good growth in it, if there isn't scalability, it's not relevant. But if there are those things, you will also get very good investment returns. So there is no contradiction here. You know, when we're looking at this, we absolutely want to get best-in-class returns. No question about it. And everybody who works here, like Katie and like me, are professional investors who've lived on numbers and returns. But having said that, we will, if you came in, I said this a year ago, if someone came in and said, we have a crypto investment that makes 100 times your money, it's guaranteed, do you want to do it? And if it doesn't have a climate impact, no.
What's interesting is the timing of all of this, because we all felt there was a lot of talk. There was even some walk prior to COVID, prior to supply chain disruption, prior to then suddenly there being what seemed to be an energy crisis and a refocusing on needing to have oil, gas, natural resources. The people you're talking to, Katie, did they feel that that was a blip? Was that something that's necessary? How do you feel people are talking about the commitment to being climate focused in our economic realities?
You know, I think that there is a widespread recognition that we are in a time of dramatic and radical transition across our energy system. There's debates about the speed, there's debates about the exact areas, but it is happening, and it's a massive disruption. And investors are drawn to areas of massive disruption because it's out of that huge chaos and change where there's big winners, there's going to be big losers, and there's all in between. Talking about it as an investment opportunity, people see that, I mean, this might be the opportunity of our lifetime from an investment perspective, and to be part of solutions. And so that's really, I think, what is the dual hook, if you will, in terms of speaking with investors across the range, whether it be people in the endowment community, people in family offices, and large institutional pools of capital. Pension capital is very interested in that solution-oriented mindset.
But Carolyn, can I just make a point? Look, we're all used as investors to looking at the ideas about industries competing with each other, new technologies coming in, and the need for new technologies to win in the marketplace. Okay, absolutely true, and we accept that fully. But there's something else going on here too, because there's another accounting taking place in the natural world every day in real time. And that is changing things. So if you go back 10 years and you look at where we were and where it was in people's consciousness, completely different. You go forward 10 years, we will be in a very different place in the natural world that will be demanding very different things from the businesses and peoples and governments of this world. And that is going to be the backdrop for every economic decision going forward. And so there's always this assumption that the status quo is going to stay. But in the case of the natural world, we can see extremely strong trends that suggest that that is a 0% probability. That in fact, the natural world is changing, and we get reports from the scientists every single day, every single week. And that is going to drive the need for economic change, for the growth in the kinds of businesses I'm talking about, that is going to be essential and urgent. And I think we see it now, but it is something that is only going to become more apparent over the next 10 years.
Katie, many would say it takes generational change. I mean, we think about the power that social media, that technology has had on this. I mean, by the way, hashtag Bloomberg Green if you want to be having a conversation about this online. But I'm interested in whether or not the people you're speaking to who have managed money at your level are all on the same program, or whether it's the companies, the founders in the venture part of your business that are more in line with your way of thinking.
There's no question that younger generations feel this more acutely. But there's many people of even our generation that care about it and are on board. And I think that it's apparent in a number of different ways. It's apparent in the way people thinking about allocating capital. It's really apparent in terms of, as we have been building Galvanize, the people that want to come to join us. Our colleagues are coming from all types of established firms, and one of the really common themes is they want to be part of a winning team. They really want to be aligned with a solution-oriented, a climate solution-oriented organization. So I think that mission alignment of what people want to do with their life, how they want to allocate their time and their personal resources, is quite, it's a deep vein of kind of motivation that we're seeing sort of across all generations.
I mean, I was just reading a story by Bloomberg of an ex-Goldman executive who managed to lure over to help retrofit all the real estate, to analyze where that capital is best deployed to do that. Is that the most obvious area of real estate for you at the moment, Tom? What other key areas of capital deployment you're seeing that's really exciting you to upend real estate, to upend venture, to upend equity investment that you're making?
Well, I mean, if you look at climate, people tend to break down the verticals of climate into 6 places, which are, this is not wisdom, this is just how people characterize things. And it's sort of electricity, transportation, agriculture. I'm actually incredibly interested in the changes that have to come in agriculture, manufacturing, the built environment, and then the ability to sequester carbon. Those are all huge verticals that have multiple facets, multiple industries within them where we need radical change. And so every one of those, to me, if we have something that will radically change that is a chance for a huge company. But it's very dependent on the people. I mean, when you look at, it's funny, but people tend to think that technology drives businesses, and technology is a huge driver of businesses. But human beings drive businesses. I mean, we're sitting here at a Bloomberg summit. I think Michael Bloomberg had a big impact on, say, Bloomberg. That's not a fluke. Understanding the humans involved is underestimated in terms of outcomes and actual accomplishment and productivity. And that is something, when you look across those 6 verticals, Joe Sumberg, who's the person from Goldberg, really wanted to lead the decarbonization of the built environment. And we had to convince him we were good partners for him, but we didn't have to convince him that was the right thing to do, because that's what he wanted to do with his life. And that's what Katie's referring to. People who think we're in a crisis and I can marry my professional life with the values that I think about when I wake up in the morning and look at my family. That's what's going on.
Let's talk about that convincing. Your CVs, your backgrounds, the money you've raised, the money you've allocated successfully speak volumes. But Katie, how do you set Galvanize apart from some of the other very worthy institutions and financial operations that are setting up that want to make change too? How do you get the right talent? What do you say about your institution?
We have built something that is different than any other organization. And it's different by the focus on climate. It's different on the fact that we have brought together And we recognize this is a problem that spans a whole variety of disciplines, and we have brought together credible expertise on the investment side, as we've alluded to. We also have on science, technology, measurement, impact. We view this all as an integrated part, a necessarily integrated part of the solution. And that's different.
Politics, Tom, you know, you played a big role in that in 2020, but you're someone who commits capital to politics. We think about the backlash almost that's happened in politics to ESG. How do you counter that? How are you navigating that conversation so that it doesn't become a bipartisan issue?
I mean, a partisan issue.
Well said, yeah.
Well, first of all, it is a partisan issue, but it's not a partisan issue with the voters. If you go to Republican voters, depending on how you ask the question, 57 to 75% of registered Republicans want a robust climate response from the US government. That it's really not about that. What we're seeing is a pushback from businesses, from institutional businesses who are worried that in fact different new industries are going to come in and outcompete them, which if they can, that's called capitalism. And what we're doing is called capitalism. It's investing money to make money, to provide solutions for people. That is exactly the system that scales in this world, which we will make no apologies for, and which we believe will win in the marketplace. So when people say to us, what are we doing? We are very straightforwardly following the dictates of capitalism to win in the marketplace and drive changes that are necessary. That's exactly what we're doing. And I think if you aren't for doing that, if you want to legislate the kind of investments that are making, that is not called capitalism. And that is something completely different. That is some sort of performative politics. And we're absolutely, straightforwardly market people who believe that that's where we will win.
And therefore, does that market mindset win in all geographies? Are you thinking, Katie, are you thinking outside of the US? Are you thinking what next industries, what areas can you bolt on to VC, to equity, to real estate?
Yes, we think that it's important across geographies. We're focused initially in North America, Europe, but it is important. I mean, the problem is global, and we very much want to be part of that global solution. Also, each part of the capital markets has a role to play, whether it be public equities, whether it be credit, whether it be real estate, whether it be growth capital and venture capital, across the spectrum, we see sort of this opportunity and need. And so we want to be part of it across the spectrum.
I don't want to be partisan about what car you drive. But I hear you were in the market for an EV, Tom, and you were finding it very hard to get one. You finally found one, managed to purchase, managed to drive it?
So I do drive an electric Mustang.
You wanted it to be
it's
fun,
almost
right?
ridiculously fast, let me say. And I mean, just saying, look, I think at some level, human beings in our society are going to have, across the board, are going to have to buy into this change. Because this is an all of society change. And I think that we can't win fighting ourselves on this. I think we have to come together on this, and I think it's a huge opportunity for Americans to win together. And that's exactly how I see this, is that this is a real chance for us, both from an economic, but from a political and kind of the meaning of being an American. I think this is a huge chance for us. And I'm very excited, and I wanted to buy a car that reflected that.
That was fun. This can be important and impactful.
Oh, that. It's
but
fun
it can
to
also
drive a fast car.
Can also be energizing and fun. And this was a great conversation. I really thank you for it. A great start to this summit. We appreciate it. Katie Bull,
thank you.
Tom Steyer, thank you.
Caroline.
Please give it up to an amazing panel.
Please welcome to the stage John Moore, CEO of Bloomberg NEF.
Morning, everybody. It's great to be here in this beautiful venue. and the Green Summit. So thank you very much for having me. It's really great to share some thoughts about world views. So really, how we think about the world shapes behaviors. We heard just before about how do we collectively work, how do we collectively work together on the transition. And it's our world views that often shape that behavior. I grew up, it was the Cold War in Europe. This is a picture of the Berlin Wall. The Berlin Wall separated east from west. If you lived in the west, you couldn't go east, and vice versa. So it literally was a wall down the middle of the city. And it didn't really mean much to me, but it just shaped my worldview. I thought that was how Europe was. If you went traveling in Europe, you went north-south. You couldn't go east-west. It was just impossible. So everybody of my generation just thought that was what you did. And what was really interesting is the Berlin Wall was only there for 28 years. So it shaped a whole generation's view about what Europe was, what was possible, how we should live, etc. It was just how it was. And so what we need now is a worldview for the next 28 years. So the next 28 years take us to mid-century. So we need a worldview that says this is how we should think about the transition. We're in the transition era. On the left, you see where commitments were to net zero at the beginning of just of this decade, 30%. So the red tells you where there was sort of, no statement at all. And on the right, you can see, so we're now over 90%. So in terms of commitment, we really are in the net zero era. Over 90% are covered by some form of government commitment or legislation, or at least under discussion. So what does that worldview, should it entail? So first off, it needs mass decarbonization. So these charts show you, the dotted line is what our economic modeling shows. If you just choose the cheapest technology, where do you get to? But the colors are really where you need to get to if you want to reach net zero. So, and if you look on the right is a list of all of the industries that need to be transformed in the next 30 years. So massive system change, decarbonization is sort of how we need to think about it. And I have a few slides to summarize that. I have a lot of slides, so bear with me. We'll move swiftly through them. But basically, this chart shows you how do you get there, what kind of components will help you get there. And based on our modeling, about half of what we need is clean power. So half of the decarbonization will come from clean power. 23% will come from electrification. So that's things like electric vehicles, electric heat pumps, etc. And then there's another 5 to 10% between hydrogen, bioenergy, CCS. There's some recycling and some carbon removals. So it's sort of that combination of things that we need. And on the power side, whichever way you jump, you're going to need lots of renewables. So left or right, economic or net zero, you'll need a lot of renewables. If you look on the right, though, you'll need renewables, plus you'll need some other renewables like hydro, you'll need nuclear, you'll need CCS, so fossil fuels with CCS. That's what our modeling tells us is part of the solution. And two other things I'd point out. One is it's going to be different by sector. So that was the power sector. The starting point and the ending point will be different if it's industry or transport or building. So again, you can see the different energy mixes start and end. And it's also going to be different by country. So these are 8 different countries. If you look at France there, the red is nuclear. So it's very much a nuclear nation. It'll still have a lot of nuclear by mid-century, but it will also have some renewables. If you look at Australia on the top right, it's pretty sunny in Australia. They are going to have a lot of solar alongside wind and some fossil fuels with CCS. So again, by sector and by geography, it'll be different, but essentially the components in the transition will be the same. So what are the 3 big drivers? One of those is going to be money. So we believe the energy transition is going to be a $200 trillion opportunity. And so if you look at the chart on the right, the supply side of that is green and gray, and the demand side of that is in blue. So you can see about 50-50 supply side and demand side of our 200 trillion. And right now we're at 1.1. So sort of the good news is it went up 31%. So despite war in the Ukraine, inflation, supply chain issues, etc., last year investment was up 31% in these clean technologies. And it's about 50-50. The words haven't quite come out in the translation here, but these are all the different. So the yellow there is renewable power. The top half of that, the green, that's electric vehicles. So that's investment going into supply and demand. And it's different by country. Again, the lines here are different countries. Let me tell you what the top is. The top is, we turn it into a quiz. The top is China. So half of the 1.1 trillion is from China. The next block is the US. So, quite a big distance behind. Then you have, countries like Germany, etc. So again, in our transition, there's a lot more that could be invested by countries. And then the chart on the left here is our 1.1 trillion, so that's clean technologies. Next to it is how much is being spent on the grid. So there was 274 billion, good job I remembered these numbers, 274 billion spent on grid. There's also, the next block is around supply chain and manufacturing, and then there's financing. So, those are the different ways that money can flow in. And what you'll see here is a comparison between clean investment versus fossil fuel investment over the last few years. The left hand of this is 2018. So in 2018, we were investing half as much in clean as we were in fossil. You can see how the green bars have risen. We're now 50-50. So we're essentially investing 1.1 trillion in both. So that's progress. But what this chart shows you is the grid plus the 1.1 on the left. The first bar is what we need to be spending this decade. So in this decade, we need to treble what we're spending on clean energy infrastructure. It goes up to about over 6 trillion for the next decade, and for the third decade, we're over 7 trillion. So those are the kinds of numbers we need to think about. And one of the ways to really shape that, we did a piece of work for GFANZ. So that's the Glasgow Financial Alliance for Net Zero. We looked at all of these scenarios from these different players in the market. And what we did is we looked at the investment spend for each one of these decades. So each color is a scenario, each block is a decade. So if you then take an aggregate of that, it tells you how much you need to invest in clean versus fossil. And the ratio you need is a 4-to-1 ratio in this decade. So that's really where we need to, for every dollar we spend on fossil, we should be spending 4 on clean infrastructure. We can't move to a clean infrastructure that's not actually built out. And if you roll that clock forward for the next 2 or 3 decades, you go 6-to-1, 10-to-1. So by mid-century, it'll be $10 for every 1 in fossil. And you can split where we are now by geography. So on the right is that ratio split by geography. And interesting enough, what you'll see, Europe now, it's $2.6 for every 1, 2.6 clean for every 1. And what I would say is that's because the worldview in Europe about transition has just been there longer. So for the last decade plus, people have said, hey, we just got to decarbonize, we may as well get on with it. And the investment has followed that. We're at about 0.6 to 0.8 for other geographies, and clearly much less the Middle East and Africa. So, and these are actually banks. So hopefully you can get the slides later. It's got all of the details filled in. But this is the top 10 banks who are investing over 10 billion. For NatWest Group, it's 5.5. So $5.5 for every 1 they invest in fossil for NatWest Group. They're an outlier at the top there. And then it moves down to things like Deutsche Bank, etc. So the top 10 take you down to about $1.3 clean to fossil fuel. So there's a long way to go. We need to get to 4-to-1, but the idea of the ratio is whatever size your bank, you can look at that ratio and say, are we actually leaning in enough to the transition? So that's finance. So then there's technology is another piece. So these are cost curves for how cheap wind, solar, and lithium-ion batteries are becoming. So I'm sure you've all seen these technology cost curves. These are now pretty mature technologies, and the good thing is the more we build, the cheaper they get. So it's 29% is the learning rate for solar. So for every doubling in capacity, it gets 29% cheaper. So these are being rolled out not just because they're clean, but because they're just the cheapest energy source that you're going to see. And then there are a few things that make a bit less sense today. So there are sort of phase 2 type technologies. One of them is hydrogen, CCS is another. So these are where the economics really don't add up. What this chart shows you is green hydrogen is the line coming down, because electrolyzers are getting cheaper, renewable energy is getting cheaper, so you can see that coming down, versus hydrogen made with fossil fuels, so with CCS, which is that blue line. And you can see in the 2030s, this really starts to make financial sense. But what we need to do now is invest in the R&D side of it. So then we'll end up with a world that either has some clean molecules. So on the left here, you'll see things like shipping and steel will be hydrogen or clean molecules, and then a whole bunch of things that are going to get electrified. So on the right, so road, transportation, aluminium, you can electrify aluminium. So there'll be some kind of balance, again, different by sector, different by geography. Two other things to comment on. One is the costs are going to be very different by geography. So depending on how sunny and windy it is, literally will tell you how cheap this stuff gets. So on the left, the cheapest hydrogen in 2013 is going to be Brazil and Chile. The most expensive is going to be at the other end of this chart, which is Japan and Korea. And that's a sort of almost like a 3-to-1 type ratio. So again, as people think about what to deploy, the economics will be different depending on where you are. And also, this is a supply-demand chart. The bars are supply for hydrogen. So this is planned hydrogen out. This takes you to about 2030. The penultimate bar takes you to 2030, and it's actually 14 million tons that people want to produce. The demand line is 4.3 million tons. So right now, the supply planned is absolutely going to outstrip demand. But again, it's early stage, so now we need policies to up that demand so we can balance supply and demand. Okay, the third thing is policy. I'm going to explain what this chart really means, and then honestly, you're going to have to read it later. So on the left is IRA. So basically, IRA, 369 billion. We highlighted 260, which is across different technologies. So the good thing is it's very comprehensive. On the right-hand side is the infrastructure law. Also, the infrastructure law was very, very beneficial. So things like charging infrastructure are in the infrastructure law rather than IRA. So again, with system change, you need policies that are very broad. And already, so we've had to redo our forecasts of how much wind and how much solar will get built because the IRA has changed the game. On the left, you'll see the solar installation. So that is 10 gigawatts more by 2025. So already by 2025, you're really going to be seeing the impact that this policy has. On the right, again, you can see on the wind side, the real uptick by 2025. So policy is a driver that can really make a difference quite quickly. This is EV sales. The uptick here takes us past 50%. So with the IRA Act, we believe that over 50% of cars sold on the road globally will be, actually this is a US chart, will be over 50%. So again, you can see the uptick. On the right is the fleet size. And there has now been 52 billion already announced on EV and battery manufacturing in the US just in the last 6 months. So that's pretty amazing. In the last 6 months, 52 billion is now being committed that would not have been committed before. And you can see that's already building out a battery supply chain across the US. So many, many states benefiting from that. And the one other thing I would add on policy is these are countries. The top is China, then Canada, then the US, top 15. And on the right is you'll see, so what are the 6 different areas, 5 different areas in the supply chain. And we ranked countries basically, because every country is now sitting down and saying, okay, there's going to be so much need for batteries. what are we going to do in the battery space? Do we have metals and raw materials? Are we going to do manufacturing, et cetera, et cetera? So again, policy needs to align to the actual industrial strategy. This one came out, right? So my son actually, you talked about the Berlin Wall. There is no Berlin Wall. This is a monument to the Berlin Wall that is now in the middle of the city. And my son Tom moved there about 2 months ago to go work there. When he was born, there was no Berlin Wall. So the Berlin Wall came down in '89. He was born in the late 90s. So for his generation, Berlin was just one large, cool city in Europe, part of a unified Germany. So in one generation, my mindset, my worldview is completely different to his. And actually, that's what we need to do with the energy transition. Up until now, we've not really had the mindset that we're all involved in the transition. And really what we need to do is have that mindset. For the next 28 years, we're all in transition. What we need to do is join up. We're going to have massive decarbonization, system change across all of those industries. We need to lean into the financing. So our financing really needs to be weighted towards clean. The technologies are already there, but they're either we need to deploy them or we need to invest in R&D or proofs of concepts to build them out. And finally, we need good policy. We need policymakers to play this game and have the same worldview as everybody else. And if we can do that, then I think we're in fairly good shape for net zero mid-century. Thank you very much.
Please welcome to the stage Kevin Bender, Senior Director of Sustainable Debt at the Nature Conservancy. The Honorable Christopher Coy, Minister of State in the Ministry of Finance, Economic Development and Investment for the Government of Belize. And Jill Doshi, Founder and CEO of Potomac Group, for a conversation with Bloomberg's Natasha White.
Good morning, everyone, and thanks for joining us. I'm really excited to be here with our three guests, Kevin, Christopher, and Jill, who together have been at the forefront of innovation around how to raise finance for nature protection and doing so while helping to alleviate a country's debt burden. Together, about 18 months ago, they helped pull off the largest ever so-called debt for nature swap in Belize. This enabled Belize to buy back a large super bond from the market at a discount and allocate some of the savings towards marine conservation. The country did so with a loan from the Nature Conservancy, which itself raised finance from Credit Suisse, which in turn raised funds via the market through the issuance of so-called blue bonds, a kind of tiered crediting structure. The Nature Conservancy has since done a similar deal in Barbados, and there's others on the table as a growing group of countries globally look to sidestep default and meet their commitments to protect 30% of land and sea by 2030. Christopher led on the deal from Belize, and Kevin led on the financial component from the Nature Conservancy with advice from Jill's sovereign debt advisory firm, Potomac Group. Thank you for joining us today.
Thank you.
So, Christopher, what was the economic outlook for Belize in late 2020, and why did you look favorably upon a debt for nature swap against other options on the table?
Well, economic outlook was certainly grim. We were in a deep crisis, fiscal, economic, debt crisis. The economy had already been in contraction at the time of COVID, but COVID simply exacerbated that situation where we were contracting around 13%, not unlike many other countries, but for us it was certainly difficult. We were already in debt distress before COVID, and COVID only made it far more worse. Our debt to GDP ratio had increased to around 133%, one of the highest in the entire Western Hemisphere. Altogether, our revenue, government's revenue suffered a fiscal shortfall of around 30%. We had to keep spending for pandemic-related expenditures the net result was that we were suffering an overall deficit of double digits. The unemployment rate approached close to 30%, and our poverty rate was in excess of 50%. So certainly we didn't have much choice but to look at how we restructure our debt, among other things that would put us back on a good footing so far as fiscal consolidation was concerned.
And why did you look towards a debt for nature swap? So to address both the debt component but also nature protection in the country. Why was that a favorable option for you?
Well, we have had a pre-existing relationship with the TNC for many years, for decades. I think the first debt for nature swap that TNC did was actually with Belize about 20 years prior. And TNC had, over the many years, expressed an interest in doing a larger deal with Belize. A new government at the time, in late 2020, it was imperative that we take immediate action in debt restructuring. And so looking at what our debt position was at the time, we felt that we had to negotiate with our external creditors. That was a sizable portion of our overall debt. So we started that process immediately. And at the same time, on a parallel basis, then we initiated negotiations with the TNC to look at how they could play a role in our overall debt restructuring process.
Okay. And Kevin, what were the key ingredients you needed to pull this off? And the Belize deal was not only the largest, but it also involved some novelties to these kind of debt for nature swaps that have been around for a while, in the sense that it opened it up to a pool of institutional investors, so pension funds and others. What were the key ingredients that you needed to make that work, and what were the challenges that you faced in doing so?
Sure, thanks, and thank you for inviting us here today, and Bloomberg for hosting this. This was an evolution of the debt for nature swap, which had been around and started in the 1980s, was popular in the 1990s and 2000s, and as Minister Coy said, TNC did their first with Belize, so in 2001, and we had this 3-decade relationship with Belize. We did a transaction in the Seychelles, which was kind of a half step in 2016, which was reprofiling the Paris Club loans to the Seychelles. But what we discovered in that transaction was that getting the discount or the haircut was difficult to do, and it was a long negotiation with the bilateral creditors. And yet we could find that discount readily available in the capital markets with the bonds. So we started putting together a program to figure out how we could work on credit-enhancing bonds to buy back bonds at a discount, and then using that savings to finance the conservation that the countries wanted to achieve. We worked with a few countries, and what you need is we were exploring with a few countries, and we had spent a long time working with the Development Finance Corporation of the United States to set up the credit enhancement. We had already tendered out for the investment bank to do the arranging, and Credit Suisse had won that before we even started the Belize transaction. But with our relationship and with the Belize currently, at the time, was in negotiations with their bondholders, and their bonds were trading at a deep discount, we saw a great opportunity to bring all of these parts together. And what really made it happen was that Belize, because of our relationship with Belize, we knew that Belize had high ambitions for conservation and a high commitment. If you look at Belize and how much they've committed on the forest side, TNC has been involved in that, and they had the commitments on the conservation commitment desires on the ocean side. So we had already made great progress on that, right? Because that is outside of the financing, but needs to go into the loan documentation. So everything kind of came together, and then there was an election in Belize, and a new administration had come in, and that's when we started working on that. And we really had serious conversations starting in January of 2001, and then we closed the transaction in early November.
Okay. And Jill, Belize was in debt distress at the time. The Nature Conservancy has since done a similar deal in Barbados, which wasn't in debt distress. There's been some discussion around whether debt for nature swaps are best suited to countries that are in debt distress or countries that are not in distress situations. Could you just talk a bit about your views there and how that debate lies?
No, absolutely. So First of all, I'd like to say that the IMF has recently come out with a paper that said that there are 59 countries that are most vulnerable to climate change. And of those, 34 countries are also at high risk of debt distress. And so the coming together of these two crises is well known. And the countries themselves are starting to organize, and they're starting to say that we need to solve these crises simultaneously. So we already have an organization called V20, which is the Climate Vulnerable Forum, which now has 58 countries, about 2 billion people in its population. We have the Sustainable Debt Coalition that was announced by Egypt at COP27. And we have the Bridgetown Initiative coming out of Barbados. And so countries themselves are linking these issues and are pushing the international community to think about it in this way. And they have been saying very much that the situation is getting worse. The vulnerabilities are increasing. The uncertainties in the market, particularly with geopolitical tensions, the war in Ukraine, food insecurity, rising interest rates. We need to think creatively about these solutions. And so the Belize transaction really starts to point a way forward of saying this is what ways that we can think creatively and bring in these innovations. And then the challenge is how to scale it. And at the same time, our frameworks for debt restructuring, particularly the G20 Common Framework, are also not working. So while we're trying to figure out how to mobilize climate finance to scale and to meet our commitments of advanced economies, we're also at the same time trying to rewrite those frameworks. So kind of bringing these together makes sense. But just also, whether you're a country in distress or not in distress, the fundamentals of debt management are that you're trying to either raise finance for new projects and new investments, or you're trying to refinance existing debt. And you're trying to do that at a lower cost and at lower risk. And so that's meaning lower coupons, longer maturities, ideally in local currency, and ideally you're also addressing counterparty risk so that if you are in debt distress, you have the ability to negotiate with your creditors and reach a solution, a resolution. And these structures that we're talking about today actually address all of those issues. And so they're quite powerful tools to have in the toolbox. It may not yet be the solution that solves everything of either climate finance or debt distress, but it is certainly a very powerful tool to be using, particularly with certain creditors or creditor groups that might be particularly difficult or negotiations that are stalled. So I think these are not exclusively for debt distress situations, but they can definitely be used in all situations where, as Kevin says, you have that discount in the market, because it's really that's driving the kind of ability to capture that fiscal space for investment in climate.
Okay. And Christopher, a year and a half in, how's it going? What impacts have you seen, both in terms of on your finances and also in terms of conservation projects?
Well, first I would say that the transaction, the Belize deal, was a tool used out of a toolkit. It was part of our overall recovery plan. We restructured other debt as well. We restructured recently our Venezuela debt. We also had restructured our Taiwan debt. And through that process, we were able to reduce our debt to GDP ratio from the 133% that I had initially indicated to you to 64%. So whereas after the transaction, the IMF had indicated that it was a important step for Belize, our debt was still unsustainable at the time. Their most recent Article 4 consultation, they have indicated that no, Belize's debt is now sustainable. So it's been a dramatic turnaround for our economy, our fiscal finances over the past couple of years. Our economy has grown over 28% over the 2 years, 15% in 21, another 12% in 2022. Our unemployment rate is from the 30% that I mentioned is now down at an all-time low of 5%. We have broadened our economy in terms of diversification of our sectors, and we're doing well. We're outperforming the estimates of all the MDBs, including the IMF, notwithstanding the challenges in inflation and supply chain and all those issues. We're doing a lot better. Our debt, in terms of the transaction itself, we had reduced our overall debt by 12%. So it was a significant immediate impact. Our debt servicing obligations in the near term, as a result of the transaction structure, meant that our debt servicing reduced on just the external commercial debt, whereas it was roughly $28 million in pure interest debt that had reduced to around, I think, 10 million, a little over 10 million. So that fiscal space certainly made a significant difference in our fiscal position. At the same time, though, I have to underscore that it is not just a financial deal. It's not just the financial partners that made that deal. The government had to play a key role in exercising political will, fiscal discipline, and fiscal consolidation. It meant expenditure containment, which involved cutting public sector wages at 10%. We had strikes as a result of that, but we followed through, maintained our position, and that built credibility for Belize in the decision making that it went through in terms of that transaction, but showing to the not only locally but the international community what the government is prepared to do and to stick to enable not only this transaction to occur, but enable investment confidence to reemerge.
Okay.
Can I just add?
Sure.
So, but I think the interesting thing is there is a debate whether the debt conversions work with a debt workout. But what Belize has done is prove that it can, but in a slow, much easier situation where it's not like a common framework where everybody's trying to solve one problem at a time. But it definitely worked well, and as the minister said, we reduced the debt 12% of GDP overnight in that transaction. So it was an immediate step. It's one solution, so it's great to see that the debt management units of the ministries of finance have this tool in their toolbox. But there have been many successes on the conservation side because we do not see this as a liability management tool. This is a conservation funding tool, right? So we're trying to help governments achieve the conservation commitments that they want to do and then come up with financing for those commitments. And like I said, we worked with Belize years before, so we understood what they were trying to achieve. But we do put that into the loan agreement, and that helps us get the credit enhancement, and that also helps with the end investors feel that these are not just plain vanilla sovereign bonds, but they're actually achieving the conservation. Those commitments are made and are time bound, and if they're not made, then there's an additional payment that they have to pay while they're outstanding. That money doesn't go to the bondholders or anything, it just goes back. But those commitments have been met so far on time without problems, and they were starting the Marine Spatial Plan, establishing a conservation trust fund to disperse these. The Conservation Trust Fund has dispersed 2 rounds and just announced yesterday a larger significant round of programs that will be funded. And then there were even some specifics of mangrove, designation of mangroves into public lands, and those have all been met on time.
Okay. So you've seen some kind of material change on the ground in terms of improving or protecting the marine space.
If I can add from a conservation standpoint what Kevin spoke to, one of the big milestones that we have achieved already is in terms of the biodiversity zones. We have increased that from 15% to 20%. We've committed to increase to 30% by 2026. And that somewhat highlights part of the importance of an alignment in terms of government goals or the country's goals. Belize is certainly very conservation oriented, and we had already committed to 30% of our ocean waters being protected by biodiversity zones. We only, under this arrangement, moved it up to from 2030 to 2026. But it was a part of our commitment, and I think that is important that in transactions like these, that there are these commitments or objectives that form part of the overall policy of the country, so that it makes it easier to happen. It wasn't hard for us to make those commitments because those were our goals already.
Yeah. Okay, Jill, please.
Yeah, I just wanted to pick up on that point as well, is that one of the really powerful outcomes of these sorts of transactions is this alignment of government between the Ministry of Finance and Ministry of Environment and Fisheries and Labor and Energy, et cetera. I mean, it just really drives that interministerial coordination and actually increases governance, because you're also putting in targets, you're setting performance KPIs, and then as you're meeting those, there's all sorts of monitoring and reporting and verification. So there's actually a virtuous cycle that can be developed through these transactions. And you're also, and we were talking about it just actually before stepping out here, about creating a different narrative for the country. And it's particularly for those countries that are in some sort of distress, whether it's in a negotiation or just in a kind of market, the bond prices, you're changing the dynamic of the conversation, where instead of just talking about the difficulties that the country's having, you're taking ownership of it and talking about something that's positive and investing in building resilience, building sustainability, and the future of the country. And so I think that's a very interesting dynamic out of these transactions that is quite powerful for any country, whether in distress or otherwise.
Yeah, okay. I'm conscious we've got the time's speeding by. I think before we wrap up, I would just like to get your response to some criticism that's emerged. The deal was kind of widely welcomed and has been heralded for its innovation, but there has been some criticism around both the costs associated with the transaction, the kind of the relative costs and the transparency around those, and secondly around the labeling of the bonds at the top of the crediting structure as blue, when not 100% of the proceeds are going towards marine projects, which is the kind of norm in the sort of green bond market. How do you respond to those couple of points there? And I'd like that to open that up to all of you. But Kevin, perhaps we can start with you.
Let's see. Well, there's two issues there. One, I'll quickly start with my responses. Of the first one is it a blue bond? And the blue bonds are not quite as defined as green bonds, right? So if it were a green bond, there what's called a use of proceeds bond, in which all of the financing would go towards projects in climate or nature, in our ocean in our case. There are guidelines on the blue bonds, but those came out after our transaction that the IFC has, and ICMA, I believe, is working on it, but there's no standard. So if there is an agreed global standard on what a blue bond is and we don't fit with that, then we will adapt. And we are actually changing ours to nature bonds, because now we're working with terrestrial and freshwater as well as oceans. But it's clear that the proceeds are used mainly to repurchase the debt and retire that debt and replace it, reprofile it with a loan. And then finally on that, We're not worried about that with the investor class. If these were retail products that were being sold to families, that would be a problem. But by law, with these private placements, we can only sell these to what's called qualified institutional buyers, who are very sophisticated asset managers, insurance companies, banks. And we know all of the individuals who made those decisions. They grilled us deeply on the conservation and the structure. So I don't feel that there is any chance that anybody was misled as to what we were doing with those, because the analysis that goes into purchasing these bonds is rather intensive. On the cost side, there are two types of costs. There's the fixed costs of the upfront costs, and I think those are pretty standard with any sovereign issue, right? You have lawyers, you have arrangers, you have SPV creation and the like. I don't see that as any different than what they would have done with a workout with their new structure. On the running costs, which is the spread between the blue bonds and the blue loan, that's composed of many things. The key one is the political risk insurance that we needed to put on the principal and the interest of this transaction. So that is the bulk of the spread, and that you can look at that as a cost, but that is a great savings, because Belize's borrowing cost in the market at the time, not that they were traded actively,
20%.
yeah, it was up near high teens and close to 20%, where in the end they ended up borrowing close to 6, just a little over 6%. So that is a massive savings for a small amount of cost. So it is a big pickup, but it is a cost. It's a cost that is common in structured products. There are other costs that, underwriting costs, for instance, that Belize, because of the negotiation, Belize had agreed with all of their bondholders that they would accept something, which means they had to finance all of their bondholders, and they needed to have it underwritten by Credit Suisse and did not take the risk of issuing the market. So these are acceptable costs they have to be in these structures, and we're doing everything we can to make those costs as efficient as possible, but this was the first transaction, and Belize really led the way on the market.
If I can highlight one item in terms of costs, the reference to the political risk insurance and the DFC, I think that in itself actually is one of the insights that we can offer from this Belize deal, that credit enhancements play a critical part in all these debt distress transactions, risk reduction strategies, one of which is credit enhancement. And if there's a learning that we can have going forward, it is the importance or value of that, and how developed countries can play a role in supporting debt distress transactions through providing risk reduction strategies like credit enhancements that the DFC did provide in our case.
I totally agree with that, yeah.
Well, thank you. Thanks to the three of you. I think we're at time, but it's been a fascinating discussion, and thank you very much for joining us today.
Thank you.
Thank you.
Please welcome to the stage Lynn Good, Chair, President, and CEO of Duke Energy, for a conversation with Bloomberg's Alex Steele.
Take it. To start off, how many of you are really familiar with Duke Energy? Show of hands.
Yeah.
Oh, okay, good. However, I still think we need a scene setter, because there were some there who didn't raise their hands. So I just wanted to spend a little time talking about what Duke does, what kind of utility you are, where the areas that you serve, that kind of stuff.
Sure. And Alex, thank you. Pleasure to be with you. So Duke Energy is one of the largest regulated electric and gas utilities in the U.S. We have a very large presence in the Southeast, but we also serve the Midwest, Indiana, Ohio, Kentucky, and a gas business in Tennessee. Because of our scale, we are leading the single largest clean energy transition in the U.S., given the scale of our transmission and distribution system and also the amount of generation that we own. So over the next decade, we will spend $145 billion about 80 to 85% of it directed toward clean energy transition.
So that's a lot of money. Like that's some serious cash. And can you take me through the mix of kind of what you have now and then what you expect you're going to be once you're able to deploy all of that money?
Sure. Today, Duke is about probably a third nuclear, a third natural gas, and then the remainder is split between renewables and coal. We still operate some coal, primarily in the Midwest. And as we look ahead, we will build 5 times the amount of renewables we have today by 2035. So 30,000 megawatts, 30,000 widgets of power production. And we're also looking to add about 10,000 megawatts of battery storage, which would be far beyond the total battery storage that is operating today in the US, just in the states in which we operate. Nuclear will continue to be a part of the equation. So we are the largest operator of regulated nuclear in the US, and we are working to sustain those plants for as long as we possibly can with a program called Second License Renewal offered by the Nuclear Regulatory Commission.
So that's the lay of the land, right? Like who Duke serves and what they use to serve that those customers, and it's a lot of money. So I just wanted to pivot to the newsy stuff of the day to see how you manage, say, First Republic may not make it. Market cap below $1 billion, stock down at record low again. Cost of capital is increasing with Fed raising rates. How do you manage that when you're also in this massive transition?
Alex, it's a really good question because as confident as I am in the strategy and the targets we've set, at least 50% carbon reduction by 2030, 80% by 2040, there are external events, and there will continue to be external events that have the potential for us to check and adjust. I think about commodity prices. We just came out of an extraordinarily high commodity price environment. Natural gas is down, but that put pressure on price. Cost of capital is high. Supply chain constraints, everything from transformers to wire. And so you have to navigate all of these things. But in my mind, if you have a clear target of where you're going, then you're just checking and adjusting along the way to accommodate all of this. And these targets always have to be balanced with reliability and affordability. And so some of the things you're mentioning, Alex, are things we have to keep our eye on to maintain affordability.
Does it push stuff out for you guys? Does it change how you deploy the capital or how quickly you do it? Or is it just, like, how do you look at that holistically?
It causes us to make choices. Okay. There's no question. And in our mind, direction of capital toward the clean energy transition is first. And so, we may make some choices. I think Alex, we've made a decision to exit our commercial renewables business. It's a choice because we have an opportunity to sell that business and deploy that capital into the regulated space because I have so many demands.
Right.
So those are the types of things we'll continue to evaluate so we can keep going. But there's no question you're going to have to evaluate how these external factors are influencing the strategy.
On a granular level, have you noticed investors more wary about deploying capital? Have you noticed banks being more wary to deploy capital?
I would say the focus on balance sheet is very high right now in our industry. And if you think about coming out of a high commodity price environment and operating in a high interest rate environment, that puts pressure on the balance sheet. A utility is very leveraged. So think of us as being 50% debt, 50% equity. And so the agencies are watching.
Yep.
How quickly are you responding and how can you maintain that balance sheet strength?
Are you noticing any signs of recession in the U.S. from your customers? Have you noticed? Yeah, we'll start there.
There's a lot of caution, I would say, Alex, but I don't have tangible statistics yet.
Right.
We continue to see a lot of in-migration into the Southeast. We continue to see extraordinary success in economic development, really around electric vehicles, batteries, chips, those types of things. But as I talk to industrial customers, there's also some caution. What does all this mean? Continue to see labor shortages. Supply chain continues to be an issue in certain industries. And so I do think everyone's watching and a little bit concerned, but we haven't yet seen the data to indicate a slowdown.
We have seen that throughout the earnings calls too. Inflationary pressures. As you spend all this money over the next 10 years, there's a boatload of money in DC waiting to be deployed. Does that increase prices for Duke across the board? Like, are we going to be living in a higher price, higher inflationary environment?
It feels that way right now. But one of the things I think about with the clean energy transition, because we are moving so rapidly in renewables, moving so rapidly into battery technology, I do not believe the supply chains have yet caught up with the aspirations, and that creates a little bit of inflationary pressure. But I think as we build the supply chain to go with where we're going, I'm hoping we can execute more longer-term transactions. When you execute a longer-term transaction, you create some certainty for the vendor and hopefully some more favorable pricing. So we're looking actively at how we can accomplish that.
Like that's a little Lynn good speak for yes, but not forever. We're
I
reading
hope.
between the lines here. Let's talk about that transition. How do we do it keeping everything reliable and making it affordable for everyone? And I say that glibly, and it seems like maybe that's an obvious question, but it's actually not. And there's a lot of money to be deployed, and there's a lot of things that can go wrong. How do you guys think about it when you're talking about it?
For us, developing realistic targets on where we need to be by when, so that we can plan for it, so we can make least cost choices, so we can contract a supply chain that's going to be available when we need it. All of those are ingredients into making sure affordability goes along. And then a lot of work on reliability every day. This is an operating issue for us. Our customers count on 24/7 every season power. And so when we unplug something and plug something else in, they have to work seamlessly. No one is waiting for us to have no power on the weekend so we can transition, from one generation source to another. So it starts with modeling. It starts with observing operating characteristics. It starts with piloting and figuring out how do we go forward. But I appreciate your recognition, Alex, that we cannot do any one of these things alone.
Right.
We have to transition. We have to maintain reliability. We have to maintain affordability.
And also, that's not to count the fact that climate change also changes the sun and the weather and like how a wind farm can operate. I mean, that's a whole different part. There's a transition and there's like, will my stuff be operational if there's a massive storm?
Yes.
How do you deal with that part of the reliability conversation?
So we live in the hurricane zone.
Yeah.
We know a lot about hurricanes. And it's interesting, the operation that we want around hurricanes begins in January of every year, so we're ready when hurricane season arrives, so we have the equipment, that we have identified relationships with contractors and other suppliers, that we have our military operation to house and feed linemen from all over the U.S. when it's time to go. And we also keep records. Where is that water likely to be? Where are we likely to see flooding? So that we make investments to minimize impact to the extent we start to see trends from the way the weather is behaving. But I think in my tenure, we've probably had 10 or 12 hurricanes, so it is a frequent event, and it's run like a military operation, and I'm really proud of the work we do. Our customers count on us, and we are there to deliver.
I've definitely seen their command center. It definitely is pretty cool. Lots of technology for it. So Lynn, to that, and this is the reliability factor, nuclear and natural gas. So we talk a lot about wind and solar. There's obviously the reliability problem and the storage problem. And you're a firm believer in natural gas and nuclear still going forward.
I am.
Why?
So nuclear for us is essential. I cannot meet any target without nuclear because I start from a place where 80% of my carbon-free generation today comes from nuclear. If you are a resident of North and South Carolina, 50% of your power comes from nuclear. I cannot retire those plants and replace them with something that runs 95% of the time that is carbon-free. So in my mind, those plants need to continue. We're working actively to secure a second license. But we're also active in small modular reactors and advanced nuclear.
Are those still really expensive, though?
And they're not yet to commercial scale.
Right, so we're not there yet, but that's something that you want to be looking at.
Absolutely. And I think about the decade of the 2020s, and you see this in the infrastructure bill. A lot of work to do. Research and development, investment, piloting, trying, getting the operations of these technologies ready to go. So when we need them in the 2030s, my hope and expectation is that they'll be there. Natural gas is part of the diverse portfolio. It serves a really important role today in a comparable way with renewables. So you have a solar and battery combination, but there's still more time during the day when power needs to be delivered. And natural gas not only has the ability to move as our customers use power, but it also has the opportunity to supply power when that renewable isn't there. So I think it will play an important role. We are spending a lot of time on R&D there as well. How can hydrogen work? How can carbon capture be a part of it? And we're also very clear on expectations around methane, setting clear targets so we responsibly use natural gas in a way that lowers environmental footprint.
Before audio freaks out, I'm just going to move your scarf a little bit.
Okay. All right.
There we go. I was like, what is that feedback? There we go.
Thank you.
You're welcome. Okay, so based on that, the other question becomes permitting, and this goes into natural gas. Like, you have to get it from one place to one place. You have to wind up managing nuclear, and if you're going to do small modular reactors, you need to put shovel in the ground somewhere. You've definitely been traumatized by permitting.
Yes.
I don't know if all of you are familiar. It was the Colonial, right?
Yes.
Yeah, it was a Colonial pipeline, Atlantic Coast pipeline, that they had to scrap. It was going to be $1 billion, $4.5 billion. The cost went up to $8 billion, and then eventually you and Dominion walked away because it just couldn't get it done. How do you feel about permitting right now?
Permitting is a challenge.
Yeah. What would fix it?
You know, in the case of the pipelines, it was litigation challenge. So every permit that was secured went to the courts, and it just creates delay.
Was it state or was it federal?
Both permits were challenged. Both types of permits were challenged. So what I would say about permitting is I think we all need to recognize there is a way to build infrastructure involving stakeholders, involving communities, and doing so in an environmentally responsible way. I believe all of that. So when I talk about permitting reform, I'm not talking about walking away from any of that. But I do think we need to recognize that some streamlining of this process is going to be important so that we can build the infrastructure necessary to achieve our objectives. And when you talk about some of those experiences, Alex, the permitting took far longer than it would have ever taken to build these things, and in some cases stop the projects entirely. And so I think, I know it's a politically charged discussion, but I believe there are some achievable things we can do to streamline, federal and state working together, federal agencies working together, and of course, always paying attention to communities, stakeholders, and the environment. But let's figure out how to build some things. We will never achieve this clean energy transition if we cannot figure out how to build the infrastructure.
I love it. Let's just build some things.
Let's do it.
Yes. Did you feel like the conversation is changing? Do you feel like there is more appreciation for the fact that we have to put shovels in the ground, that we have to seriously consider new types of nuclear reactors, or not?
I feel like the conversation is there, Alex. I think in nuclear in particular, the conversation has changed dramatically over the last 5 years. But when it comes right down to it, we have to be able to work together with our federal and state agencies and secure permits. And we have to sustain those permits to the point of construction, and we have to get some things in service. So I'm optimistic, but there's still a lot of work to do.
McCarthy, the House Speaker, is trying to pass his own debt ceiling plan, and part of that is going to be rolling back some of the subsidies from the IRA for green energy, et cetera. Do you feel like the train has left the station and that you're going to keep going on this plan no matter what comes from DC? Or do you feel like if all of a sudden we do repeal some of it, that investment stops, that technology stops?
I think there are a couple of things I would say there, Alex. Because we operate in a very political environment, both at the state and federal level. Houses change every 2 years, Senate's some places 4, some places 6. What we focus on at Duke Energy is where do we believe we should go for our customers, for our company, for the sustainability of our investments. And then how do we navigate through changing political waters? And I believe our commitment around carbon is an unchanged commitment, but it may be a check and adjust depending on how public policy either supports those efforts or is an obstacle. The Inflation Reduction Act for Duke Energy's customers is a way to reduce price. And so we were supporters of those tax incentives because of our business model, every dollar goes right to my customers. So it does lower the price of the clean energy transition. I think it will have an economic impact to get infrastructure built. But trying to find a way to keep going in all political seasons, working with both sides of the aisle, bipartisan if we can, is always our objective at Duke.
How do you think about energy poverty? We talk a lot about reliability and affordability, and then green. How do those three interact?
They have to be balanced. And I think if you appreciate that a utility I serve everyone. I don't have a choice on who to serve. Anyone who sort of lives in my territory, I serve. So you can picture the demographics of what that might be. From low-income senior citizens, I also have manufacturers that are trying to compete against overseas companies. So affordability across the board is important. And we learned a lot during the pandemic because it was not only a health crisis, but an economic crisis for many people. And I shared with Alex a moment ago, we put together what we called an agency team, a team of employees at Duke whose job is to figure out how to help vulnerable customers with their bills. Because there are federal dollars, or state dollars, or social service organizations available, safety net organizations, but often they're so difficult to navigate that over that 2-year period, we were able to connect $300 million with our vulnerable customers. And I think that's going to be critical as we pursue this transition. It's another lens on affordability that we have, citizens, customers that struggle, and we have to figure out how to keep the lights on for them so that they can take care of their families.
Yeah, I mean, that's a lot of money.
It's a lot of money. It's a lot of money.
$300 million.
We're really proud of
That's
it.
a lot. And,
Yes.
and that's before we're moving into solar and wind and more
We're
out
at
of
the beginning.
coal. Like, this is the beginning of that transition.
Yes.
We only have like 40 seconds left. So I just want to get your take. When we talk about the energy transition, which I know will be the topic du jour, is that the right word that we should be using, energy transition? What's the word you guys use?
We use
do?
clean energy transition.
You do use transition. Okay.
Clean energy transition. Because that encompasses nuclear, it encompasses renewables, it encompasses battery storage, energy efficiency, demand response, electric vehicles. And those are the technologies we're going to be putting together over the next many decades.
Will we ever be without natural gas? Like with fossil fuels?
Alex, we look at our system every hour of the day,
Yeah.
into the 2030s, into the 2040s. I think about natural gas as being important until we can find a carbon-free technology that operates like natural gas, that follows load, that ramps up and down. And when we find that, we'll be in a transition into a new technology.
What a great way to end. Thank you so much,
Thank
Lynn.
you,
It was a
Alice.
pleasure. Thank you, guys. There's also a break now. You get 20-minute break. Be back in 20 minutes. Have your coffee, get snacks, and we'll see you guys later.
Please take your seats. The program will begin in 5 minutes. Please take your seats. The program is about to begin. please welcome to the stage Bloomberg Green's Amanda Colson Hurley, Akshat Ratti, Todd Woody, and Aaron Rutkoff.
Hello, everybody. Thank you again for being here with us today. I have three of my colleagues here who are part of the core of making Bloomberg Green happen, and we're going to have a conversation about some recent work we've been doing that speaks to things that are going to go on later this year. Before we do that, though, I wanted to make an announcement about another exciting Bloomberg Green event that's going to be happening towards the end of this year. We're doing for the second time a documentary filmmaking contest called Bloomberg Green Docs. Last year was our first go-round. We ended up with more than 100 submissions from filmmakers, many of whom were first-time filmmakers, who shared with us short-form documentaries about their vision of the climate future. It was one of the most fun things we got to do last year. We had a big event in LA where we screened the winning films. We're bringing this back for year two. So if you or anyone you know is a filmmaker who would like to submit a film to our contest, there's a website, bloomberggreen.com/greendocs. There are these postcards around that have the entry requirements. I'm really excited to see what we get for year two, and so please help us spread the word about Bloomberg Green Docs. The other exciting thing that you can pick up at the end of the event today is a copy of the latest issue of Bloomberg Green magazine, which just came out about a week ago. That's basically how I'm going to start the conversation with my colleagues here, is speaking about some of the things that are in this magazine. So Akshat, to start with you first. We spent together months talking about someone named Sultan Al-Jaber. He is, among many other things, going to be in charge of COP28, which is going to be in Dubai this year. The sort of shorthand that we developed for talking about him was sort of like Thomas Cromwell in British history, like a commoner who had risen to be this crucial advisor to a king, not just any king, but the king of an oil kingdom, who now finds himself tasked with the world's most important climate event. Can you kind of introduce everybody to Sultan Al-Jaber and why he's such an interesting figure right now?
Yeah, so he is the CEO of ADNOC, which is the UAE's largest oil company by a margin, and essentially the cash cow that has created the riches that is the United Arab Emirates. But in his previous life, before he became the CEO of the oil company, he was also the head of their renewables play, which is a unique thing in the Middle East because it was the first country to actually make significant investments in there. And so you have all these contradictions in what he is. He's not a royal, but in a very powerful position. He's an oil CEO now running the climate summit that will decide progress for the world. And it was really good to explore that. Nobody had done this sort of detailed reporting that I hope we were able to manage. And he's going to meet every important climate person through the year. So to get to know a person with that background is useful.
And everyone can read Akshat's story, which is out online now, and it is in this magazine here. But you are one of the few journalists who's gotten to sit with him one-on-one. I know the response publicly, especially among climate people, has been very negative to him. Can you tell us a bit about what your conversation was like, or how did he feel about the reaction that he's gotten so far?
Yeah, so he was he became president in January, and pretty much every headline after he became president was, an oil company CEO is running a climate event, which immediately creates all these frustrations among climate activists who've seen that the fossil fuel industry has slowed down progress so far. What we were hoping to do in our conversation with him was place those questions to him to get a response for all the controversial statements that have been thrown at him from not just activists but also credible green groups, but also to understand how climate diplomats see him as an ally, which has come through in many of their statements, who want a more business-like approach to what is a bureaucratic event. And so it was good for us to be able to sit down with him, talk through it.
Well, for those of you who are here who will also be in Dubai for COP28, Akshat will be there, and we'll be having another event like this, so stay tuned for that. And now, Amanda, I wanted to ask you about another powerful person that was profiled in a slightly unexpected way in our magazine. The Florida's governor, DeSantis. We did a kind of climate biography of him, and It wasn't exactly what you would expect for the guy who's mostly known as maybe the heir to Trump and also the person who is leading this backlash against ESG. Can you tell me a bit about what we learned about his kind of environmental backstory?
Right. Well, I worked on this story with a reporter based in Florida named Mike Smith, who has been covering DeSantis a lot for months, and kind of uncovered something not predictable about DeSantis as he was building this national profile as a sort of attack dog against ESG investing, and furthering these other anti-woke policies, kind of culture war policies. Mike realized that actually DeSantis has a pretty deep-pocketed base of support among wealthy wildlife and nature lovers in Florida, and this is because there has been a long-standing and long-stalled plan to restore the Everglades, which is very important for biodiversity and clean water and just water supply in Florida. And DeSantis really has been the one who kind of got the money secured and kind of got this plan going again. That has really won him, the loyalty and in some cases pretty big donations too, from some of the wealthiest people in Palm Beach. And in fact, Paul Tudor Jones told Mike, I'm basically a one-issue voter when it comes to Ron DeSantis, and that issue is the Everglades. And he gave him, I think, close to $1 million for his reelection as governor. And so this is just a really surprising, support base that he has. And meanwhile, other environmentalists in Florida, like the Sierra Club, I think they gave DeSantis a D- report card because, on the other hand, Ron DeSantis also likes fossil fuels and, says we shouldn't do anything to inhibit their development.
Yeah, I was going to ask, does this predict that he will be maybe heterodox on climate, or do you think he'd follow in the mold of Trump were he in power nationally?
Yeah, I think one thing that he and his team have already done in Florida is try to project a public image as being a modern-day Teddy Roosevelt, right? So that he's a conservationist who is going to protect clean water and Florida's natural, Florida's wildlife and natural resources, but he's not going to use any type of mandates to restrict fossil fuels or, really to take kind of mitigation action on climate change.
And Todd, you had a piece in the magazine that touched on a subject that's just like the most buzzed about thing right now, which is the artificial intelligence. We weren't looking at like ChatGPT or these kind of things, but you found what I've myself as a reader found to be a very surprising application for AI in climate and environmental space. Can you talk about the startup you profiled?
Essentially, Skynet's going to save the whales. So collisions with big container ships and other big vessels are a leading cause of death of endangered whales on the East Coast and the West Coast of the US. And as an offshore wind boom gets underway on the East Coast, people are really concerned because one of those critically endangered whales, the North Atlantic right whale, and its habitat is right where we're going to build all these wind farms. There'll be an incredible increase in ship traffic. So what happens is scientists put microphones called hydrophones in the water to listen for whale songs, whale vocalizations, or they use cameras that sort of scan up to the horizon. Then AI, they get a photo or a recording of vocalization. It basically goes through a library of thousands and thousands of whale songs or photographs to identify that species. And then once that species is confirmed, it sends an alert to a ship captain. Slow down.
And so essentially the whales there's a new risk because of clean energy. I mean, on balance, how is that playing out in terms of people's concerns about these wind farms or any opposition we're seeing?
Some politicians have tried to make hay over it, saying that there's a lot of whales washed up over the last year in New Jersey, New York. Scientists at NOAA and the government say there's absolutely no evidence that wind farms, but there is concern about the ship traffic, because ships are going to be hauling the materials to build the wind farms, and this is right where whales have moved in because of climate change. They didn't used to be in this area for a long time, but because their prey is shifting, they're moving to where the wind farms are being built. So the federal government has strict regulations about all the things that wind farm developers have to do to make sure that they're not leading to the demise of the whales. So this is a new tool for developers to use, and one of the first wind farms going up is using this AI tool.
That's great. Just real briefly, Akshat, who among many other roles for Green is the host of our podcast Zero, and often spends time talking to people in startup and technology. More broadly, if we're looking at AI or large language models, what are some things you're interested in talking about this year in terms of how those things might be applicable to climate?
I think in the last 12 months, we've had this explosion of interest in AI because of ChatGPT, where you can just go in and ask a question, and sometimes it gives you an interesting answer. But what that kind of interest hasn't yet come through on climate. It's not like there is an application, unless there's a whale application, where you get a moment where AI and climate have come together to solve a problem that grabs everybody's attention. But on the other hand, AI and machine learning, which is the core part of how artificial intelligence as we see it has developed, has been participating in improving small things for a long time. So we've written stories about two companies that I can point out. QuantumScape, which is a battery company, that use machine learning to try and figure out battery materials and new battery materials already. Another company called ViveGrid has been using it to figure out how to manage charging infrastructure for electric cars as the number grows from a utility perspective. And just having machine learning just simplifies the problem so much more. So we'll see more of those applications, but apart from whales, I haven't found a grabby one yet.
So I want to switch tracks now because we're essentially the opening act for John Podesta, and there's going to be a big discussion, I'm sure, with him about the IRA. So I want to talk about that. And Amanda's been leading a lot of our coverage, and I wanted to know if you could kind of remind people of the size and scope of what the IRA, was in its passage 8 months ago, and where you've been following the money lately. What we've kind of seen over the last 8 months of where the money's going.
Right. So with the IRA's passage, this was, by far the biggest piece of climate legislation in U.S. history. The bill contains, I think we're going with these days, $374 billion. Is that the total accounting?
From like 370 to 374 over some
right.
point.
$374 billion of credits and incentives mostly towards climate, and is expected to spur much more than that in private investment. I think maybe Goldman Sachs had an analysis the other day putting the number at somewhere in the low trillions. But it's just going to be completely transformative, we think. After we at Green published the initial estimates and analyses, we've turned to trying to follow as that money starts to go out into the economy. And what we're seeing and what analysts are also seeing and predicting is, interestingly, a flow of that money mostly to red states, states that voted for Trump rather than Biden. They are expected to see well over half of the total investment, and this is according to estimates by the White House, and other analysts are saying the same thing. And you're already kind of seeing that in the form of solar developers flocking to states like Ohio and Indiana, where there's a lot of flat agricultural land, and farmers who are pretty interested in at least cutting deals with solar developers, but some of the state legislatures aren't very keen on it. So that's a tension that I think is going to remain there. We're also seeing a kind of battery belt emerging in Georgia and other Sunbelt states, as EV production really takes off domestically. It's just a super exciting dynamic period, I think.
So I want to get back to some of the battery plant stuff with Akshat in a second, but first, Todd, I wanted to go to you because that's sort of like the macrocosmic scale of the IRA, but one of the things that you cover as part of our Greener Living reporting group is sort of how decarbonization is hitting people where they live, and literally in your case in their homes. Like we've been looking at kind of consumer applications. Today we had a story about how if you want to get an EV with the IRA incentives, there's only 10 models, and if you want to get a minivan, there's only one, and it's kind of hard to come by. But if you go inside the house, can you talk about what some of the incentives are for homeowners and sort of some of the obstacles you're seeing in your reporting of people actually using these incentives.
2 words, heat pumps. Heat pumps are highly efficient electrical devices that can replace your furnace and your hot water heater. The IRA incentives are quite generous, $8,000 for a heat pump for heating and cooling, which would pay, depending where you are and the size of your house, you pay half or 2/3 of the cost. The problem is, as I found personally when I had to replace my hot water suddenly, is that even in San Francisco, where I'm from, there's a shortage of electricians who can do this work, and there's others who are like not familiar with the technology. I got a lot of conflicting advice and some wrong advice. So that's going to be a big obstacle, is the people to actually install these devices and walk the homeowner through all the rebate procedures, which are quite bureaucratic. This money's being distributed through the states, so each state has to come up with its own program approved by the federal government before money can flow. So it's not going to be until the end of this year at the earliest, probably 2024, before the money goes out. But already last year, heat pumps outstripped, or they sold more heat pumps were sold than furnaces, which tells you the demand. Then there's like $4,000 to upgrade your electrical system, which is another huge hurdle. Most houses in the US were built before 1980, which means for all this new electrical load, you often have to upgrade your system, which can cost tens of thousands of dollars. And most people don't realize that until their heat pump or their furnace fails or their water heater here, then they go, oh, you can't pull a heat pump in because you need to do the upgrades. There's money for heat pump water heaters. There's money for heat pump dryers. You can replace your natural gas dryer with a heat pump. So yeah, it potentially is transformational, but there's this nitty-gritty hurdles that need to be overcome first.
And Akshat, I know that in this magazine you have a great story looking at unusual battery startup that's both been incentivized or pushed forward by the IRA, but they've been working on this technology for a while, and it's kind of I think emblematic of what's happening. Can you tell us about Form Energy?
Yeah, I mean, one thing that's also in the magazine is that climate tech has sort of entered a new era where it's going from the old sort of wind, solar, and lithium-ion batteries, which continue to get subsidies, to new age technologies. And for those new age technologies, especially capital is the biggest bottleneck. And so we have a story of Form Energy, which is a battery company that uses rust, so iron oxide, which is rust, and just converts iron into iron oxide and back again to charge up and discharge a battery. But they needed capital to scale up, and so they've got now a $760 million factory that's being built in West Virginia, some state money, some federal money, plus a ton of tax credits that is going to make their battery already competitive as they sell it commercially. So that kind of bottleneck solving is good, but I've heard from many of the startups now that government money is there. It's really permitting issues, and it's these other steps that need to come through. So the bottleneck has just moved to a different place now.
And I wanted to ask you one other question about the kind of broader reaction to the IRA. I know you looked at Europe. There's been a lot of talk of this starting kind of like a trade war between the US and Europe over green policy. What did you find in your big deep dive into the European response so far?
Yes, I live in London, and after the Inflation Reduction Act passed in August, there was really nothing from the European side for months. And then suddenly the European leaders woke up and were like, oh, actually, there might be a problem here. And so we went through what the last 6 months were like, and essentially where we've landed is that Europe doesn't see it as a direct threat as much, because now they've worked with the White House to figure out some of the things that felt like a threat. But also what Europe itself is doing, which is the Green Deal, is substantial and sometimes larger in sums of money it is putting forward. But it's just different because Europe is not one country, the rules are not the same, they don't have the same tax rules, for example, so you can't play the tax credit game, and Europe is bureaucratic. So the rules are taking longer to deploy. But overall, what we've noticed is there's just competition between Europe and US and China on green stuff instead of just collaboration, which is the sort of fuzzy feeling after the Paris Agreement. And it's a world that people are used to.
Well, we have 1 minute left, and I wanted to turn back to Todd and break away from the IRA. I first met Todd working on a story about deep sea mining. It's an issue that he's deeply passionate about, and he produced some amazing scoops for us on it. I know there's a big issue with deep sea mining coming up over the summer. I wondered in the last minute if you could make the case for why this audience should be paying attention to deep sea mining right now.
So electric car batteries need cobalt and nickel. The largest reserves of these metals are in the bottom of the ocean. Mining has not happened, but the international body that regulates mining is poised to approve regulations. And scientists believe this could be an environmental catastrophe. And one thing that hasn't been paid attention to is that battery chemistry is changing. And it's probably highly unlikely we'll need these metals in 2035 or 2030 like we need them now. So we could be doing something horrible for the ocean for economic reasons that don't exist anymore.
And over the summer, is there kind of a turning point or something to watch?
July 2023, the International Seabed Authority is meeting. That's to finalize regulations or to begin accepting applications to mine. They have not finalized the regulations, so it's big up in the air whether they're going to be able to move forward and take a mining application into consideration, but a lot of nations are calling for a moratorium or a ban on deep sea mining.
Meg, are we allowed to take questions from the audience at this point?
I actually do not have any questions from the audience right now, but I was going to ask you a question, which is, you have an announcement to make.
Oh, I did Green Docs at the top.
Oh, you did at the top.
I did
I'm so sorry, I missed
But
it.
I will remind everybody again, if you see these postcards around, please grab one. And if you're not a filmmaker yourself, to please give this to someone who is. One thing I will say, just to go back to Green Docs, one of the coolest things that happened last year when we started this contest, I mean, we got great films from actually accomplished filmmakers. The winning film was clearly the work of somebody who had experience making a documentary. But as a judge in the contest last year, one of my favorite experiences was getting to see people who had never made a film before do this. And we had a climate scientist whose film was about her work studying climate change impact on sea otters, which was just really amazing. She clearly grabbed an iPhone and wanted to tell people the story about what she was seeing. And the fact that people were responding to this opportunity with that sort of very personal work really just meant a lot to me. And getting to do this in year two, I'm really excited to see what comes next.
Great. And my other thing I was just going to mention is we will have copies of the magazine available if you hadn't mentioned that yet either. So those will be available here for everybody when you're leaving. The question was, how do you weigh in on the deep sea mining thing?
So
politicians.
I'm going to turn this over to Tom.
So basically, there's 167 member nations plus the EU of the International Seabed Authority. So it's really a state-driven process. So it's your national representatives.
And just to go back real quick to some of your prior work on this, a lot of the companies that are very interested in being active in this space are actually trying to influence not the United States government or like big governments, but it's often very small developing economies where this is happening.
There's a company called the Metals Company. It's registered in Canadian, even though it's run by Australians. It has contracts or licenses from 3 very tiny South Pacific island nations who are supposed to ensure that they comply with environmental regulations, have effective control over them, which they don't. I mean, this company raised more money in its last round than some of the GDP or the revenues of the countries. I've also done stories showing there's a big conflict of interest between the ISA, the regulatory body, and the companies themselves.
All right, well, thank you guys so much for being here, and thank you for being on the audience listening. Thank you.
Please welcome to the stage Lucas de Grassi, professional racing driver for the FIA FormulaE World Championship, for a conversation with Bloomberg's Ira Broodway.
Thank you all for being here. Thank you, Lucas, for making time. You are in between racing in Berlin and Monaco, so he's squeezing us in between some auto racing. For those who don't know, FormulaE, which Lucas helped to create, it's an all-electric version of kind of Formula One, so open-wheel cars, tight turns, the whole thing. And I wanted to talk with you first about that, how you went from racing combustion engine cars to racing electric vehicles, and how you helped to create this circuit in the first place, the dawn of the sport.
Good morning, everyone. Good morning. It's a pleasure being here. Thanks for your time. Formula E, for people that is not familiar with motorsport, it's the same as any other racing series, but we started it in 2012 with the idea of creating a battery-powered electric car to race, to accelerate the development of technologies that you'll see in commercial vehicles in the future. So back in 2012, nobody was really talking about electric cars, or only a few people talking about the future of electric, but we saw that as an opportunity to create what motorsport has been doing for the past decades, which is to develop actually relevant technologies that we'll see in commercial applications. But not only that, also try to change, in a way, people's perception of electric car. So if you see a fast electric car racing around the track, you see that the car is exciting, the car is sexy, you're probably, when you have a higher likelihood of buying an electric car when you're going to purchase your next vehicle. So that was the core principle of creating Formula E. And that happened because back then I was in Formula One. And in Formula One, they were already talking about hybrid engines. It was the first year when I was racing that they were starting to talk about efficiency, about electrification. And the clear next step was to come up with a full electric series. And that's how Formula E was created. And that's how my career shifted quite a lot, because after that I raced in hybrid cars, and then now for the past 9 years I've been racing Formula E.
I want to go a little bit into, well, speaking of sexy hybrid cars, I drive a Chrysler Pacifica hybrid minivan. And so I know a little bit, I've driven EVs, I know what it's like, the difference between a gas car and an EV. I can go 0 to 60 in a little under 2 hours usually, but I wonder, for a race car driver, that's a big transition, and what that experience is like behind the wheel with the EV versus the traditional gas race car.
It is a very different experience. There's the personal experience and, of course, the technique of driving the car fast. I think the most personal experience, the difference between driving an electric car is that it's quiet. So for the purists, the first question I get for the past 10 years is that, oh, you drive an electric car an electric race car, don't you miss the sound? And I was like, yeah, kind of miss the sound, but it's not what actually makes the car go fast, it's not the sound. And you can hear the crowd. So in some races, if you are in a slow corner and everything is, you can hear the suspension moving, you can hear the tire, and you can hear the crowd. And in motorsport, you'll never be able to hear the crowd, of course, because the engine is so loud. So this experience changed a lot my relation to electric racing, but also in the terms of the technique, the car has so much torque. We have now the Generation 3 Formula E car. We are on the 3rd generation car. It has 2 motors, one in the front, one in the back. The front motor has 350 horsepower. The one in the back has 450 horsepower. And the motor is this size. It's 20 kilos heavy. So you can put 4 motors and have 1,800 horsepower very easily in the car. It's just a matter of a decision. We have only 1 gear. The car goes from 0 to 190, 200 miles per hour with a single gear. The engine is 97% efficient and it's not, when you say 97, okay, that's maybe, but it's through the whole range of the RPM. You don't need a gear, you don't need gearbox, you don't need oil. And when you reach 97% efficiency, it's so high that you almost don't need cooling anymore, because only 3% of the energy is dissipated as heat. So it's a big leap. And of course, the bottleneck are the batteries.
Right.
Batteries are heavy, the batteries, they don't last long, but the technology is evolving a lot. In the first year of Formula E, we had 2 cars, because we couldn't do the race with a single car. True story, you can look on YouTube. So they made us jump from one car to another on the pit stop. I thought that was insane. Actually, it was insane. I got a lot of bruises because you need to jump out of the car. So you stop in the pit stop. Instead of the mechanics changing the wheel, you had to jump from one car to another. And in 8 seconds, gets belted in and drive off. And then generation 2, battery was big enough or energy dense enough that you could drive the whole race. And Gen 3 now has more or less 1 kilo per horsepower. The car can accelerate in less than 2 seconds. It's a big leap forward.
Right. No, that noise question, I love that because I once wrote a piece about guys who drag race Teslas against gas cars like in North Carolina and watching people encounter that for the first time when it just launches silently.
Yeah, the torque is instant, right? It's different from a combustion car.
Right, yeah. But the tech transfer piece that you mentioned, I want to go back to because I think that's really interesting. We've seen this for decades in the automotive industry, disc brakes, independent suspension, all this stuff that is in cars now that everyday people drive started out in race cars. How are we seeing that already beginning to happen with electric vehicles borrowing from what you are doing in Formula E?
Yeah, so there is many different technologies that we are actually racing now that you guys will see on the road in the next few years. The motor, as I just said, reaches a certain efficiency level that will increase range by maybe 5 to 10% in the near future. The fast charging, our batteries are capable of charging at 600 kilowatts, which means that it means 2 things. So in the racing, during the race, we don't use mechanical brakes. So the car has no brakes at the rear, there is no discs, there's no brakes at all. And in the front, we have a safety brakes, which are only used in qualifying, but in the race, 100% of the potential usable energy that the car is actually at speed is recuperated into the battery. So when you brake, you recuperate all that energy. You have no wear on the disc. There is no brakes, all magnetic brakes. The capacity of charging is 93%, which also is like almost twice as much as some of the vehicles we have there. And that means that you can actually fast charge the car with a charger at 600 kilowatts, which means in a conventional vehicle, you'll be able to charge your car in maybe 5 minutes, full battery. So these technologies are being tried out in the racing, and then we will see that in the future very soon.
Right. And the other piece you mentioned is a common sort of one for sport across the board of just changing perceptions, changing awareness. I mean, we look at sports, football, soccer, there's talk about these events like the World Cup, they're hugely emissive and in a way unnecessary, right? But they also are these huge platforms for athletes to talk about what matters to them and maybe cause change. In this case, it's a really, you're practicing the thing that you're asking people to change in a way, right? So how does the sort of public awareness piece work with Formula E? Who are you reaching and what is the message that you're bringing?
Yeah, motorsport is a unique sport because you're developing the technology in parallel with awareness. So at the same time the technology evolves, those technologies we just talked about, also you have big reach and you can promote this technology, you can promote the electric vehicle, you can promote the message that you want to pass to the fans. Other sports, they don't do that. Like which technology, I don't know, football developed? Pretty much, I don't think none. That goes directly from the pitch to our daily lives. But of course, the awareness of the sports people and some celebrities are very important to transmit the message, considering the message is a good one. Yeah.
Right. And you are not off the track, you are also involved in clean air initiatives for the UN. And we were talking a little bit about how that piece of emissions sometimes gets overlooked, that you're talking about just pollution, and that with electric vehicles versus traditional combustion engines, but really any e-fuel, there's an important difference that you think sort of is decisive. I wonder if you could sort of talk about that.
Yeah. So there's a lot of talk about different fuels, what's gonna be the next, let's say, technology that is gonna be used. And my work with the UN started in 2017. And the message I want to use, that I want to together with UN to put forward is that electric cars, they contribute, if any, a very little amount to climate change as a whole. Of course, it's something positive. Depends your energy matrix, depends how you produce your energy. There's a lot of nuances we can discuss for 3 hours. The full cycle of production of the vehicle, only the mileage, the emissions here or there. But what we cannot ignore, and is much more important, is air pollution. We are here in the middle of Manhattan. I'm from Sao Paulo. I've been to Delhi. I've been to Mexico City. The amount of hours, days, maybe months lost due to air in lifespan, due to air pollution is huge. And electric cars, they cut that. You can have a biofuel car, you can have an e-fuel car, but, I mean, they pollute in the same way. Maybe they are carbon neutral, but if you lock yourself in a garage, like we discussed, if you lock yourself in a garage and you turn on your biofuel car, you die the same way as a normal car. So electric vehicles, they reduce drastically, well, they emit zero pollution. So the air quality that we're talking about will improve massively the lives of people worldwide, especially in dense packed cities. So definitely battery-powered electric cars in those cities are going to be the future.
Right.
Not biofuel, not e-fuels, not hydrogen for private cars.
Right. Were there questions from the? We have just a little time left. Check in. One here. Ah, there we are. Go ahead.
I forget his name right now, but the boss of F1 recently said F1 is always going to stay with IC. It's never going to go electric. Do you have a comment?
Yeah, so that's a great question.
He asked basically whether Formula One would ever go electric.
Yeah, Formula One, IndyCar, NASCAR. What's going to happen with these categories if the future of cars are electric? And I think that there is only two scenarios. If they want to stay relevant to commercial vehicles, they will have to go electric at one point, or they don't. They become a pure entertainment platform. They focus on other technologies. They can focus, for example, in light construction techniques. They can focus on e-fuels. E-fuels are going to be used, yes, in aviation, most likely. One way to decarbonize the aviation industry is not electrifying aviation. Would be most likely to put e-fuels. So you could use some of these technologies that you develop in a Formula One car, in a combustion engine, to kind of transfer to a different industry. But it's a decision that they have to make. But from our perspective, from FormulaE, the new fans, the older generation, I would say even my generation, they are very attached to the sound and to combustion. It's something that you grew up with. But the new generation, they almost don't care. And if we do a good job with FormulaE, it will create the new audience that will be agnostic about how the car is powered.
Very good. Was there any? I think we have maybe one more here.
Yes. That's a great question. So basically, what's the difference between pollution and climate change, and how electric cars can help with that? So if you take all passenger cars worldwide, it represents about 3 to 4% carbon emissions, carbon dioxide emissions. So if all of them go electric, and the energy production to charge those cars are also fully renewable, we're talking about a mitigation of 3 to 4%. Not including the process of building those cars. So it is relevant. It is. For climate change, do we need electric cars to be 100% or to be net zero in the future? We need electric cars. But we're talking about, UN estimates about 4 to 5 million deaths a year prematurely due to air pollution. And air pollution is not binary. You don't have or you don't have. there is air pollution everywhere. It's just a matter of how much. Like you said, I've been to Delhi. I did a documentary on air pollution there, and some points it gets 999. The sensor went through the roof, really, and stops, goes to the maximum. And that, I went to hospitals, I spoke to doctors. The situation is critical. There are millions and millions of people that suffering with chronic respiratory disease because of air pollution. It's all caused by cars? No, but cars are a massive contributor to that. And here, I guess, is one of the main ones. So even if Manhattan, for example, has a lower AQI than Delhi or Sao Paulo, still, your quality of lives and your kids, they will be better off if all the cars here are electric. You're riding your bicycle from here to another place you want to go, you'll be healthier by not inhaling those harmful gases. So if we have the technology, we have the capacity to do that, we should do it. And then there is the nuances of how the energy is produced. If the energy is produced by fossil fuels, they are basically, they could be mitigated because it's in a single place, so it's already better. But the carbon emissions, they stay there. So it depends on how the energy is done. For example, in Brazil, the energy matrix is 80% renewable. So an electric car in Brazil is actually electric. But an electric car in China, maybe, or in other places which the matrix is very coal-based, even Germany now, even with gas, it's not purely electric. Of course, there is emissions from the energy grid.
Good. We have to wrap. I could go all day, but we're out of time. I apologize. This has been fascinating, and I really appreciate you making the time.
Thanks, Dara. Thank you very much.
Trees are sanctuaries. Whoever knows how to speak to them, whoever knows how to listen to them, can learn the truth.
Listen, just for a moment. That's the sound of life being restored, of a habitat coming back to life. This is the story of the Zurich Forest Project.
The best way to reflect on biodiversity is to be inside the forest like we are now. So you can see with your own eyes the difference in this tree, or in that one, a bird that flies by, or a butterfly. You realize how rich the forest is. So the best way to explain it is to observe with your own eyes and pay attention to the signs that nature sends us.
The Zurich Forest Project began in 2020 as a collaboration between Zurich Insurance and Instituto Terra, the non-profit created by the couple Sebastião Salgado and Lélia de Luiz Vanik, in the Atlantic Forest in the southern Brazilian state of Minas Gerais. They started over 20 years ago, and since then more than 2 million trees have been planted. As a result, over 250 native species of animals, like hummingbirds, parrots, lizards and anteaters, have returned to this forest. Zurich sponsorship contributes to planting 1 million seedlings over a period of 8 years and to supporting Instituto Terra's expansion.
When people get to know what we do, they start to understand the importance of conservation, preservation, and restoration.
The ultimate goal of the Zurich Forest Project is to help restore a delicate, precious ecosystem rich in wildlife, insects, and flora and fauna that had largely been destroyed by humankind. The Atlantic Forest was once 760,000 square kilometers. That's the size of South Africa. Today, it's roughly just 1/5 of that.
Nós sabemos que aqui é possível. Há 20 anos atrás, isso aqui era uma...
20 years ago, this land was degraded, and today we have a young forest that is being enriched with native species to improve its biodiversity. We still have the chance to reverse the conditions on this planet and to improve everyone's life.
Today, when it comes to restoring a forest, scientists will tell you that important guidelines need to be followed to ensure that it's done correctly.
The most exciting thing about the Zurich Forest is how it's based on the best available restoration science. We have to build systems that value the immense complexity of nature, across genetic, species, and ecosystem levels. And that's exactly what's happening in Brazil, where they're using the right mixtures of species, the native combinations that bring back a healthy ecosystem.
And so, with great care, a seedling becomes a tree, then a forest of trees, a forest rich in biodiversity.
You have to look after it very carefully. Give it the supplements it needs. That's how a tree is. You have to take care of it with affection.
We have to get the ecological part right and the social part right, driven by and empowering the local community. When you get the social and ecological parts right, that's when restoration succeeds.
New opportunities have been offered in the area of Amores, which has otherwise depended heavily on mining, and 200 experts in reforestation have already been trained.
My name is Arno. I work in the area of education and we have a study center here. So this investment is essential because we're educating the people who are going to transform the forest and will protect these areas. And we are here not only creating a forest and preserving this forest, but we are also educating our own guardians of the forest.
I came to live here in Amores 13 years ago. If we lose the forest, I think we lose hope in life. That's why environmental education is so important.
Show people that it's possible, but a lot of work. And no one does anything alone. Nobody does anything alone.
The Zurich Forest Project is just one example of Zurich's dedication to sustainability. Zurich cares. Zurich is listening. Let's do environmental restoration the right way, with care and vision. Come follow us on our journey.
Please welcome to the stage John Podesta, White House Senior Advisor for Clean Energy Innovation and Implementation and Chair of the National Climate Task Force, for a conversation with Bloomberg's Francine Lacroix.
Thank you so much for joining us.
Oh, it's great to be here. Thank you.
I mean, you only have a small job of implementing the Inflation Reduction Act and all the money that goes with into the projects. Do you have the hardest job in Washington, the second hardest, or the third hardest?
Well, definitely the president has the hardest job. I think the chief of staff has the second hardest. I know that from experience. And then, but this is a lot of blocking and tackling. I thought it'd be easy to give away $370 billion odd dollars, but it turns out there's a lot to it, to try to get it right, to make sure that it's going to the right purposes, to do both the transition from fossil fuel-based energy to clean energy, but do it in a way that is going to pay dividends to the people who have often been suffered the most from pollution, from environmental degradation, et cetera. So we're trying to do all that at once. It's a huge project. And it will transform our economy, but it's really exciting to do.
So you basically have a business plan, right, of what needs to be done in what time frame. What's the hardest thing that you need to do?
Well, I think I'll answer maybe it's slightly differently. The most important thing we need to do, given the fact that while this is this program is government enabled, but it's private sector led, most of the support for clean energy is coming through the tax code. We have to get the guidance right so that people have, there's predictability. They know with certainty that when they make an investment that they can take advantage of the tax credits that are included in the Inflation Reduction Act, the other supports that are there running through the tax code. And, you know, capital sits on the sidelines until they're certain about what the rules of the road are. And likewise, we have to make sure that the safeguards are in place so that the IRS can administer the program. And I think we're well on our way to doing that. But that is a huge project. There are 24 separate tax provisions in the Inflation Reduction Act. And what that means, normally it takes the Department of the Treasury a couple of years to put out guidance. We're trying to accelerate that, get it done quickly. And we're seeing the results of that, which is virtually every day. Just yesterday, for example, there was $8 billion more of announcement of new battery factories being sited in the United States that will power electric vehicles here.
So John, you're one of the most well-respected people in Washington. You've been around the block. You're like a veteran. You were actually going to retire. So what brought you back to the White House?
I like to joke that I failed at retirement. I worked very hard on the outside. I was chairing a think tank that I founded called the Center for American Progress, but worked very hard to see first and was very happy that the president took this on during the course of the 2020 campaign, and then make good on it in the early days of the administration. We pushed for the legislation to pass. It was a little bit perils of Pauline. It died 4 or 5 times, but it came back to life. And so when it did pass and the president asked me to come back to the White House and try to help implement it, I had a lot of experience in government, so he had confidence that I would add value in that enterprise. I thought it was, if you can help out, you should do it, particularly against a crisis that I've been working on really for the better part of a generation. I started with President Clinton in the White House, really focused towards the end of the administration on the security and both the human security and the national security consequences. And then I've kind of made a career out of being a climate advocate.
So what's changed actually in the last 2 to 3 years? It feels like there's a lot more focus on climate change and sustainability.
Yeah. I think, the most fundamental thing, again, I think about this from a kind of policy and political level. I think we stopped asking the question, what do we shut down? And we started asking the question, what do we need to build? And that was, I think, a happier story, one that the American public could get behind. And I think you also are taking advantage of the deep cost reductions. Solar power is now the cheapest power to deploy in the United States, and that's why you see it growing exponentially, both domestically but also globally. 75% of the new power generation is going to come from solar over the next 5 years. So we're taking advantage of trends that are already there, but the climate crisis requires us to accelerate that. And I think that's what's exciting about this moment. I think that, I worked for President Obama as well on climate change. And at that point, we were trying to reduce emissions by the middle of the century by 80%. That's where the world was. We had the problems were severe weather was both adding to, again, the tremendous cost burden on economies, but it was also upending human security around the globe. And so 80% seemed like a good deal. And then in 2018, the IPCC did what was called the 1.5 report. What was the difference between what a 2-degree world looked like and what a 1.5-degree world? And the catastrophe to the planet between those two poles led everybody to conclude that actually the job is bigger. We have to go to net zero. And that's a transformation of the global economy on the size and scale that's never occurred in human history. So that's a kind of daunting task, but it's full, I think, also of challenge, opportunity, the chance for innovation, and the chance to have the private sector play a fundamental role in making that change happen.
I think most citizens understand the benefits and getting to the goals, but the divisions politically get wider and wider. Why?
Well, I think if you look at where the American public is, there's relatively broad support for clean energy across the political spectrum. It's stronger amongst Democrats than it is amongst Republicans, and independents are, as usual, kind of like in the middle. But that's not reflected in our political arena. And I think one of the things that's occurred, some of that is vested interest that invest in politics to produce that result. Some of it's disinformation that is rampant, particularly in this arena.
But that's not new.
But I think some of it is there was it's fundamental, particularly in Congress, viewed as a sort of, it's become as something of a culture war issue. So the Republicans right now, as we're speaking, are trying to repeal the Inflation Reduction Act in the House. I don't think the American people support that. I don't think they want that. I don't even think their constituents want it. Particularly, there's so much investment taking place now in red states, in red districts. The president said in this year's State of the Union, I know you didn't vote for this bill, but I'll see you at the ribbon cutting. And there's truth in that, power in that, because these members are embracing the investment even as they're trying to repeal the essential supports that resulted in companies globally, certainly in the United States, but global companies coming and saying the United States is a great place to invest right now in this clean energy future.
So how do you match, the clean energy future with more drilling? And I know allies across the world are always saying, well, U.S., because of the size and scope, should be doing so much more.
Look, we're still, the world still is powered, particularly in transportation, on oil and fossil fuels. The result of the Russian brutal invasion of Ukraine and the use of fossil fuels as a weapon against Europe and the resistance to that invasion has meant that Europe needed new supplies of natural gas. So those are issues that are real, and the market has adjusted to that, partly through policy, but partly through a swing to try to supply Europe. The United States has now become the largest supplier to Europe of natural gas. But over time, we have to change that, quite frankly. And that's why the support for electrification of transportation is so vital. That's why the investments that are coming both through demonstration programs that are being run by our Department of Energy, they're happening in Europe, they're happening around the world, in reducing emissions from the industrial sector, which are harder to do because they require high levels of heat. That's why there's so much interest, for example, in green hydrogen. Eventually, if we're getting to a net zero world, that means a world powered by clean and renewable energy. It means transportation that's really built around electrification and zero emission fuel cells. It means industrial processes that are reducing the amount of fossil fuels that are going in. It means more direct air capture, and it means we're going to have some CO2 we got to deal with, both from the air and from industrial process. We're going to have to put that into permanent storage.
So, John, 5 years from now, how will you look back at 2023? Is it the start of something or an actual turning point?
Yeah, I really feel like it is a turning point of it, and it is a transformation that was, I lived through in the earlier part of my career, seeing the power of what the internet did and what communications and information technologies did to our economy. I think this is even more profound than that. And it's at a global scale to transform an energy system that is huge, incumbent, and it's got to happen fast. If we're going to have a planet that's livable and have a secure future for our children and grandchildren.
So no turning back. How do you future-proof anything that you're putting in place right now?
Future-proof?
Yeah.
Look, I think this bill, I describe it as being sticky. You know, it's because really, as I said, it's really built around a strategy of investment and private sector investment. The supports that are included in this bill are quite different than what we've seen in the past in the U.S., which is 10 years of predictability, so that you can plan big things, you can make big business decisions, you can deploy capital that will pay returns over an extended period of time. And again, you're seeing companies both at the startup and small business level as well as large industrial corporations taking advantage of that. But once it happens, once there's steel in the ground, once those jobs are created, once people have the capacity, really even at a consumer level, to get the cost reductions, the benefits from cleaner technologies, both in terms of public health, but also in cost reductions, very, very hard to turn that back.
John, I mean, sometimes I imagine every day you have a difficult conversation with someone. Who do you think about to keep going on climate change? Do you think about your kids? Is it someone that inspired in your youth? Like, how do you just think this is the right thing to do and we won't stop?
You know, I think about all the people who really need to lead better lives. My kids are grown, you know. My grandkids are kind of tackling this as college students. But there's a future out there for a lot of young people. I had the honor of serving on the Secretary General's high-level panel that wrote the first draft of the Sustainable Development Goals, traveled all around the world and talked to young people. And that's both inspiring and it gives you a sense of responsibility about what are their lives going to look like, what are the jobs of the future going to be like, how are they going to have livelihoods that make sense, not just in the United States, which I'm first and foremost concerned about, but globally, and particularly in developing economies. So every day I think, well, you do what you can. You can't. This is not the kind of a problem that you turn a switch on and you solve overnight, but you make progress. You go forward. You try to always, as I said, do what you can.
Are investors behind you? So this is government-led but private money. When they have questions,
well,
does it come from?
I think it's really amazing. Actually, there's already been more than $200 billion of announced investment in clean energy technologies. That covers virtually everything from electric vehicles, batteries, reshoring of new investments in critical minerals in the United States and amongst our friends and partners. We're seeing solar supply chain come back to the United States, announcements about the manufacturing of modules here, deployment happening all over the place. We've got challenges. There's no question about it. We kind of forgot how to build things in America in a sense that permitting is tough. We need to reform the system for permitting clean projects in particular. We've got challenges.
In terms of what, how to do it, or in terms of
no, we
the
just
right
have to. We
absolutely
have to do a better job of resolving problems earlier and moving faster. So, to give you an example of that, if we're going to meet the power sector goals in terms of clean energy deployment, we have got to add 60% to our transmission system. In order to do that by 2030, we have to double the speed in which we're permitting transmission. There are projects on the drawing board, but they often take too long to come to fruition. That's a problem both at the federal and state and local government level, but we need, and we're doing some things about that using our executive authority, but we could sorely use some legislation to just speed that up, not push communities out of the decision-making process, but bring them in earlier so that you understand the context for where there is an environmental problem, what's the workaround, can you mitigate it, get that done faster, earlier, and get the stuff built.
How do you measure success? So will you only be successful when you no longer have a job because it's the departments that think about sustainability within their budgets?
Yeah, well, look, I think this is always going to be a project of the White House, and maybe that's because I'm a White House-centric guy. I don't know, but I do. But we've got a terrific team in the cabinet. President's put together tremendous leaders across the cabinet, and they're seized with this. And just to go back to these problems: workforce, permitting, supply chains, etc. Things like permitting, workforce, those weren't tackled at the cabinet secretary level. They are in this administration. We meet regularly amongst our kind of sub-cabinet of people who are charged with this. Gina Raimondo at the Commerce Department, Deb Haaland at Interior, our Secretary of Energy, Jennifer Granholm, our Secretary Vilsack at USDA. We meet regularly to work through specific issues, specific problems, project by project, to make sure we're on task, on time, and that didn't happen. I think because we're doing that, maybe we're setting a standard for future administrations.
Do you spend a lot of time talking to climate change deniers?
Well, I encounter climate change deniers. I mean, it's kind of like I say, at this point, you really just have to open the window and look outside to know that climate change is happening, and it's happening in a way that's creating tremendous risk in the system. You see the huge spike in the damage that's being done by extreme weather, whether that's hurricanes, droughts, floods. There was money in the bill that I'm in charge of trying to implement to deal with the mega drought that's occurring in the Southwest. We're working with the Colorado River Basin states to see what the future is going to look like there, to kind of reduce the way we utilize water in the system to get kind of long-term benefit of that. I mean, it's everywhere. But
people don't see it. I mean, some people don't see it.
Well, I think they see it and they deny it. I mean, I think that's, I guess that's true about everything. But, I think for the vast number of people, they know it's happening. It used to be that, again, from thinking about this from public attitude and politics, it used to be people recognized it, but they thought it was, way off in the future, not a priority for government. And I think that's changed too. Again, there's difference across the political spectrum between Democrats and Republicans on that matter, but people see this as an urgent problem, particularly independents and Democrats do. And I think they see the benefits of transforming the economy as being real, as both coming to their communities, creating jobs. One of the features of this bill that I think we're very proud of is that private sector, again, still making the decisions, but they get a 5x bonus if they're paying prevailing wage and using certified apprentices. So we're drawing people into the workforce, paying a decent wage, creating middle-class jobs. That's different than the way legislation was built in the past. But I think it has a tremendous opportunity to kind of spread this. And you see investments from Georgia and Alabama to Ohio and Michigan to Nevada and California, really all up and down and across the country. In Texas and Louisiana, I mean, this is happening, and I think people welcome it. And so that's an exciting part. One of the things that I spent a lot of time thinking about and working on is making sure, again, that those communities that were really burdened by pollution in the past see those benefits of a clean revolution as well.
Do you have like a green technology or climate change utopia? Like, or do we need to travel less, eat less meat? What does it look like?
Sure. After we spend a lot of money on fusion, we'll have cheap and ubiquitous power that's carbon free and can power everything. But you know, I'm being a little bit you know, just cute here. I think if you look at these the change that's happening, I think you got to go sector by sector, and that push for investment and innovation is happening across the board. That creates growth, that creates momentum, that creates sustainability, and I feel like if you think about big waves in the economy that power the future growth, clean energy. You know, again, it's clean buildings and better agricultural practices, better forestry practices. That is really going to be the driver of the future growth of the economy here and around the globe.
But how cheap does it have to be to rival, and also for clean energy?
Look, you know, as I said, clean power is already cheaper than fossil power. new deployment of solar is cheaper than fossil fuels. Now, we've put some support behind that with investment tax credits, production tax credits, as have Europe, China, other places. But that drive towards innovation is going to lower costs. One of the things that, you know, people question us sometimes about we get it from the perspective of U.S. investment, what's it going to do for the world? And BCG did an analysis at the end of last year that predicted that these clean energy technologies will cost reduction curve will be on the order of 25% by the end of the decade, just as a result of this bill. That means for every dollar or euro or yen or that's invested, it can go that much further. You're buying 25% more of clean product, and that's, I think, very important for the developing world and developing economies. Both the large economies like India, South Africa, Indonesia, but also across Africa. You're going to see the cost curve driving the ability to deploy these clean technologies going down, and that's a global public good.
I know there are a lot of leaders here or actually watching us from home. What's your number one advice to be a green leader in 2023? How can you be a green leader? What's your advice to anyone who wants to be a green leader?
I think you have to set a goal that's not too far out in the future. I would say you ought to have a plan for what you're doing over the next few years, but I think particularly for business executives, what is 2030 going to look like for you? And what does your enterprise look like today? How far, there's a lot of net zero pledges out there. Bunch of them are out at the mid-century level, which is, I think, consistent with where governments are in 2045 or 2050. China and India are 2060. But I think that it's not good enough to have a 2050 goal if you're not charting the progress to that and you don't have concrete plans for what you're going to do to really develop a sustainable business enterprise in this decade. This is the decisive decade. So I think people really should be measured by that, and investors should be demanding that. And I feel like that is in fact kind of happening in the marketplace.
John Podesta, thank you so much for your time today.
Thank you.
Thank you. That was great. Thank you so much. Thank you. Thank you.
Listen. This is the sound of a forest coming back to life. The sound of a fragile, biodiverse ecosystem being restored, rejuvenated, reinvigorated. This is the story of the Zurich Forest Project.
Okay, I know everybody wants to get to lunch, but I urge you to stay for a second because I have a lot of instructions of things you can do during the lunch break. So you might just want to hear that before you rush off. So we are, as I mentioned, we're doing a couple of things. If you pre-registered for the Power of Restoration, Impacting People and Planet, that starts at 12:45. You had to pre-register, and that is straight down the hall. So you'll head that way if you're doing that session. And then for everybody else, I welcome you to go downstairs to grab some lunch. That's where we'll be serving lunch. And then we have 2 lunchtime activations that you can participate in. So the first one is what we call facilitated networking. So basically there's 4 designated networking groups. They're all focused on different topics that we cover at Bloomberg Green. So you basically can just select the topic that interests you. You'll see the signs downstairs in the networking area, and you just will basically get to talk to other people that are interested in the same topics as you. So that will start at 1 o'clock, so you can eat first and then participate in that. And then the other one we will have will be back in this room starting at 1 o'clock, and that is How to Save the World in Under an Hour. That's also an interactive segment that we're doing using this Inroads. Some of you might be familiar with it. And basically what you will do is we're gonna see how we can all work together to save the world in under an hour. So that will be back here at 1 o'clock. And then I just encourage you to come back here at 2 o'clock, and that's when we will resume our main stage programming. So now I'm done. Thank you.